Breaking news. President Trump's trade war escalates. Last-minute talks with Canada fall apart overnight, in spite of positive messaging just hours before.
We should be able to have a deal with Canada.
Now, fresh 50% tariffs are in effect on billions of dollars of Canadian goods.
Plus, the White House unveils plans to help lower beef prices. But some American cattlemen and Republican lawmakers have beef with the proposal.
And the president weighs in on the Treasury Department's bond buybacks and the potential for more intervention.
We have many types of intervention. That's one. The ultimate intervention is our military.
David Gura, was that you groaning at my beef
I did
pun?
audibly at the beef pun.
All right, welcome to Bloomberg This Weekend. We're coming to you live from our world headquarters in New York. I'm Christina Ruffini.
I'm David Gura, along with Alexis Christoforous and Felicia Mateo on this Saturday, August the 22nd. Welcome to our listeners and viewers across all our Bloomberg platforms on radio, television, streaming on Bloomberg.com and on the Bloomberg Business app. And just to recap what we talked about there at the top of the show, there was a lot of kind of positive feeling going to these last-minute talks between the U.S. and Canada in Washington, D.C. The vibes were good,
this was not really on our radar when we went, yeah.
And it all fell apart. So now we'll see what happens in terms of promised retaliation from Prime Minister Carney. And we should say the U.S. Trade Representative Nathan Grawe indicating the U.S. would respond in kind.
A lot of trade, $900 billion in bilateral trade on the line here. But first, we're going to go to Alexis for the headlines.
Thanks a lot, guys. And that is our top story this morning. The U.S. slapping 50% tariffs on $20 billion worth of Canadian products after talks between the two longtime allies broke down late last night. The tariffs take effect immediately on hundreds of items, including plywood, liquor, electrical equipment, even hockey gear. Prime Minister Carney promises retaliation, saying, quote, Canada will match those tariffs dollar for dollar to protect our workers and businesses. The two sides blame each other for the collapse in talks. The U.S. says Canada made 11th-hour demands that upended a draft deal worked out earlier in the week. President Trump was in South Carolina yesterday making a last-minute appeal for Senator Darlene Graham, his pick to replace her brother, the late Senator Lindsey Graham.
With your help this November, we're going to stop the radical left Democrat communists here in South Carolina and all across the nation. And we're going to elect Senator Darlene Graham to fight for South Carolina and to always put America first.
Voters will decide Tuesday whether Graham or Congressman Ralph Norman will be the Republican nominee on the November ballot. Supreme Court Chief Justice John Roberts is allowing the White House to continue construction on President Trump's $400 million ballroom project, at least for now. Roberts signed a temporary order yesterday allowing work to continue while the court considers an emergency appeal from the Trump administration. Lower courts had ordered a halt to the project, finding that it must have congressional approval. U.S. cattle ranchers and the Republicans who represent them are pushing back on President Trump's plan to allow more beef to be temporarily imported into the U.S. tariff-free and sold at 25% below current market prices. Beef prices have been soaring to record highs amid a cattle shortage, strong demand, and limits on cattle from Mexico. Ranchers warn that increasing imports could hurt American ranchers who are seeing rare profits this year. And California Governor Gavin Newsom says he prefers a settlement of the state attorney general's lawsuit opposing Paramount Skydance's acquisition of Warner Brothers Discovery, quote, if it's a good deal. Newsom weighed in ahead of planned talks Monday between Paramount and the states challenging that $110 billion merger. Paramount CEO David Ellison is threatening to move the company out of California. A board vote could come as early as October. Christina and David.
Alexis, thank you very much. It's costing a lot of money the longer it drags on, needless to say.
It's like the merger that never ends.
Yes.
I feel like I've been covering it since I started here. Alexis, thank you so much.
Sure. I want to get back to that top story that Alexis mentioned just a moment ago. Joining us now is Jeff Mason, White House correspondent for Bloomberg News, along with Jonathan Levin, a columnist for Bloomberg Opinion who focuses on U.S. markets and economics. Jeff, let me start with you. There was some bonhomie going into this, to use a phrase that'd be familiar to our Canadian friends to the north.
Really?
Good feeling taking place in these talks. Let me just read through the dueling statements that we got after here, or at least read a little bit from them. Nathan Grawe, U.S. Trade Representative, saying Canada declined to finalize the trade deal under the terms agreed to earlier this week, despite the U.S. offer to Canada to receive the best treatment of any major exporter to our market. Looking at what the Prime Minister, Mark Carney, said in his statement, we have recognized from the beginning that America has changed and that we will not return to our old relationship. Canada has what the world wants, and we will not allow any nation to determine our future. We will set our own course to keep building Canada strong for all. Jeff Mason, first question to you. What happened here late last night?
Well, what it sounds like happened is that the outlines of a deal that they had a few days ago, which prompted President Trump to give negotiators a few more days to keep going, collapsed. There's a little bit of a competing narrative about why it collapsed with regard to whether the Canadians didn't like something or whether the U.S. side didn't like something. But in any case, it collapsed. And I think, I would take a second to step back and say, this is Canada that the United States is fighting with right now, the northern neighbor that has been not only a key trading partner for decades, but a friend and a close ally, not only here in North America, but as part of the G8 or G7, what it's become. And this is our friend, shall we say. And the two sides the tension between the two sides are now at, I would argue, nearly an all-time high. Earlier in his term, the president also offered / threatened / raised the possibility, we can say, of making Canada the 51st U.S. state. That did not go over well there. And as you can see from Prime Minister Carney's statement, that has prompted action in the North to really strengthen Canada's economy. And he even said that earlier this week, when talks were still going, that the focus would remain on making Canada more independent from the United States. And that is certainly the direction that his country is going now under his leadership, and that is popular with Canadians.
Jonathan, we referenced it earlier, but I have a lovely little chart here from our Bloomberg colleagues. $900 billion in trade annually. It seems to me there's two issues here. There's the policy itself and the impact of these potential 50% tariffs, but there's also the impact of this consistent unpredictability. I know markets hate it, and I know officials hate it too. When I talked to Canadian officials during the last round, the thing they were most frustrated about is not knowing what was going to happen. How are you expecting the fallout from this to go as markets open on Monday and as we see the impact of the tariffs themselves?
I think markets have basically moved on from the tariff story, and I'm not sure that that's actually the right way to think about it. There's a sense that tariff pass-through is over. It's no longer an inflation story. But I think if you look deep into the consumer basket in the United States, you see that we're still living with many of the ramifications of the decisions that were made in 2025. I'll give you just one example, right? So we're talking about a lot of agriculture products today. So consider the 2025 tomato tariffs that not a lot of people
Sure. Yeah, that was on my pay board. Okay.
Sure, right? So, okay, there were first order effects, but a lot of people have forgotten that we are only now living with the second order effects, right? Tomato tariffs go into effect. So farmers abroad decide not to plant as many tomatoes. The domestic tomato industry suffers a freeze, and all of a sudden, voila, in the past few months, we're living with major produce section inflation in the United States of America. So when people think, well, these are just on again, off again decisions, the fact of the matter is there's a long lag in the decisions that are made today, and they could well be the inflation that we live with in 2027.
Jonathan, inflation's been the story of the week. I guess kind of the broader fiscal house story combined with the inflation story. And we saw Treasury Secretary Scott Bessent's intervention in the bond market earlier this week. And the president was asked about that last night as he made his way to Myrtle Beach, South Carolina, to stump for Darlene Graham, who's running for Senate there. Let's take a listen to what he had to say about that intervention.
Did you direct Secretary Bessent to intervene in the bond market? Was that your idea?
Not at all. No, he's a very capable man. He wanted to do it. He's very good at it. He has a good touch, very good natural touch for the bonds and interest, and he did that, yeah.
The yields have come back up since then. Have you talked to him about another type of intervention? Is that something he will be doing?
We have many types of intervention. That's one. The ultimate intervention is our military, and if we have to use that, we will.
The ultimate intervention is our military in the context here of bond market intervention. Jonathan, I'll ask you what you think the president meant by that, as I also note here his comments about the Treasury Secretary having a very good natural touch for the bonds and interest. The Treasury Secretary floating that there's more in his toolkit yet. What did you make of the president's remarks, and what do you expect the Treasury Secretary to announce here in the days to come?
Well, so this is Treasury Secretary Scott Bessent doing his best impression of King Canute. King Canute, of course, was the medieval king who marched down to the shore and commanded the tide to stop. And guess what? Just like King Canute, Treasury Secretary Bessent is not going to move the needle with, maybe 32 billion a quarter of interventions in a $30 trillion plus bond market. It seems to me to be a nakedly political attempt to look like he's doing something less than 3 months before the midterm elections. But as I say, I do not see this really moving the needle. This is an administration that time and time again has turned to gimmickry because it seems panicked about what is going on in the long end of the bond curve. We saw them change bank capital requirements. We saw them come out with the Genius Act, which had a real treasury market angle to it. We saw them join Japan in the yen intervention. And I think all of these things were basically backdoor efforts to address the situation in the long end of the yield curve, or at least prevent it from getting worse. And guess what? Each and every one of them maybe bought you an afternoon.
Jonathan, tomato tariffs and King Canute references,
Yes.
you're fitting right
Welcome
in
to the
here
show.
on the
His
weekends.
debut here.
Lovely to
Very
have
happy
you.
to have
Jeff
you here.
Mason, the bar is now very high. Jeff, I do want to ask you about the larger policy ramifications of this, because there's this quote from the British Columbia Premier, David Elby, this morning saying, our politeness should never be mistaken for weakness. We'll always defend ourselves. We didn't ask for this, but we'll keep fighting for as long as it takes. It seems to me that there is so many other non-economic cooperation lanes between the U.S. and Canada. I think about NORAD, I think about Space Force, I think about the Air Force. Is there concern that this spat could spill over into other foreign policy goals and objectives that the president might like to pursue, and the Canadians might say,
Give me a second, Christina. I'm trying to think of another reference besides King Canute.
Yeah.
So I can compete
It's all right.
with Jonathan.
We'll come back to you. We'll give you time, Jeff. It's all right.
I mean, come on. But no, I think your question is spot on. And I think I would respond to it with another question, which is, as we get through kind of the midpoint of nearly the midpoint of President Trump's second term, one of the broader questions that I think observers will be asking is how much of what he has upended can be turned around, how much of it can be put back in the bottle, as it were. Some things that are concrete, for example, the East Wing, which President Trump tore down in order to build his ballroom, that's never coming back. And there are multiple examples of that in terms of physical things that President Trump has changed in Washington that will never change. On a policy level, certainly some things can be reversed, but the relationship doesn't just go back. And Canada has made clear, both the quotes that I was referencing from the Prime Minister earlier and the ones that you were just referencing, Christina, suggest that this is a country and the leadership of a country that don't want to risk just waiting to see who succeeds President Trump, and whether that relationship, whether that friendship goes back to where it was before, or whether this is a more permanent rift. And in some ways, Canada is accepting / stating that this is a more permanent rift and reacting accordingly with its policies.
Jonathan, on the toolkits that the Treasury Secretary has at his disposal, he floated that he has another one that comes to dealing with Iran. And I'm going to read a tweet that he fired off this week, quote tweeting what the president said about an economic D-Day coming for Iran. The Treasury Secretary is saying, any remaining tie to Tehran will hasten a nation's economic oblivion, whether that tie be purposefully constructed or willfully ignored. So we're waiting for details on subsequent interventions from the Treasury Secretary when it comes to the bond market, the U.S. bond market. Also waiting for new detail here on the way that the administration plans to tighten the screws on Iran further. He's floated a press conference on Monday. How do you think about this, the ramifications of additional sanctions, presumably on Iran, how that would ripple through the global economy, and indeed sort of what that would mean if the administration took a new tack here toward China, which seems like the only viable path they could use here to really tighten those screws?
Yeah, well, what I know domestically is that this administration's top priority, or at least what I think the administration's top priority should be, is affordability here. And again, we see that we see them time and again trying to address this through these backdoor policies, these little interventions and things. What the administration should be concerned with are the levers that it can pull on. You know, objectively, all of these geopolitical entanglements, together with tariffs, are adding a modicum of upward pressure to inflation. It is true that there was some unnecessary hand-wringing about how bad the inflation could get after the tariffs, and initially when we saw the Iran conflict begin. There was some hyperbolic language, and people say, well, none of that came true. But what we have to do here is we have to think about the counterfactual. If we weren't in Iran right now, and if we hadn't done tariffs, we would probably be looking at inflation in the United States of America in the low twos. We would probably be looking at long-end bond yields that would be substantially lower. So if the administration really wants to address these issues, that's a great place to start.
Jeff, there's, the national debt surpassed $40 trillion this week. And as we talk constantly about Republicans trying to show that they're doing enough to bring down prices ahead of the midterms, I want to play you some sound on that very issue.
National debt, as you know, it's surpassed $40 trillion. Have you been discussing what to do about that?
Well, I have, and it's been a problem for 35 years. And what we have now that we've never had before, we had a pretty good piece of it in my first term, as you know, is we have tremendous growth. And the way you take care of debt is with growth. And we have tremendous growth. We've never had growth like we have right now. The growth will take care of that very easily.
Will the growth take care of it? And will the growth take care of it in time for voters who go to the polls in November?
Well, it's certainly not by November, but that has been President Trump's argument for some time, and it's kind of a classic example of a disagreement between Democrats and Republicans on debt and how to deal with it. The tax cuts, Democrats would argue that President Trump ushered in during this term and also during his first term have contributed to that in a way that they think or that they would argue is unsustainable. And he, of course, has argued in that clip and elsewhere that the tax cuts are generative to the economy, and that's one reason why his policies have focused on that. But I would stand back again and look both at that answer and to loop in the conversation we were having about Secretary Bessent, which is that both men, and that means writ large this administration, are looking at ways to try to undo or try to offset the economic impacts of their policies and of President Trump's policies because of the political risks that it's creating going into November.
All right, Jeff, we're going to have to leave it there.
Jeff Mason, their White House correspondent. Jonathan Levin, columnist for Bloomberg Opinion. Thanks to both of you. John, thanks for making your debut here on Bloomberg this week, and much more to come
and
here.
And Jeff's coming back as well.
Yes, stay with us.
Thanks for joining us live on Bloomberg this weekend. I'm Alexis Christoforous. Let's update you on today's top stories. President Trump is promising an economic D-Day against Iran as the war drags into its 6th month and as the U.S. faces dwindling stockpiles of key weapons. Former U.S. National Security Advisor John Bolton tells Bloomberg's Balance of Power the president has lost his way with the war.
The problem we're in now is the president didn't think through what his objectives were, didn't take adequate steps. He's been on again, off again for months now. And I think the Iranians see weakness. They see his concern for the upcoming November elections, and they're trying to play off that.
Bolton says the U.S. should bring military force to bear to open the Strait of Hormuz. Iran's president, meantime, is calling for an end to the war, saying that Tehran holds a position of strength as diplomatic talks remain stalled. 8 people died yesterday when a small plane crashed on its second attempt to land in heavy fog at a remote military airport in Alaska. The National Transportation Safety Board says the pilots couldn't see the runway and had to rely entirely on instruments as they tried to land about 450 miles west of Anchorage. 2 U.S. Army Corps engineers were among those killed. And Apple is cutting jobs across teams responsible for the Siri digital assistant and the Vision Pro headset as the tech giant focuses on new devices and artificial intelligence. The cuts affect more than 200 people. The revamped Siri AI is expected to be rolled out in September alongside Apple's new operating system. And I am looking forward to a smarter Siri, guys, I've got to say.
There you go.
See, but this is why I'm not an early adopter of these things. I wait
Do you
to
use
see
Siri?
what-
You're always talking into your phone.
I'm voice to texting.
Transliterating.
I'm voice to texting.
What you have to say.
Well, if you voice text, just make sure you reread it before you send it.
Yes.
Because there are lots of typos.
No, I would never send typos, right,
Oh,
David Gura?
no, of course not.
My text messages would not be constantly laden with typos.
Of course not. Alexis, thank you very much. Appreciate it. Well, another big story today. Construction can continue on President Trump's ballroom at the White House for now.
That's right. Chief Justice John Roberts issued an interim order, an administrative stay that will give the Supreme Court more time to consider a longer-term decision. All right, joining us now to explain is Greg Stohr, who covers the Supreme Court for Bloomberg News. All right, Greg, this decision from Roberts is, well, this order, excuse me, is 64 words.
I counted them. Can confirm that. One sentence.
This is David's notes that I'm reading. 64 words. In layman's terms, what does this do?
Well, I meant to count the words, but I'm glad that you did it for me because I forgot to. I mean, it's really just a holding pattern. As you said, it gives the court more time. We're expecting an order that will say either that the president can keep constructing until the litigation is over, or that he has to stop, at least with the above ground work. And instead, what's probably going to happen is we'll get that order, but not until next week sometime. And for the time being, the status quo prevails, and that means he can keep building and building very quickly.
Greg, talk about the arguments that have been made on both sides here, and it seems like a flurry of paperwork here in recent weeks, but I'll read from a statement filed by the National Trust for Historic Preservation in the United States after they submitted their brief to the court. In a statement, the organization said it reiterated in its filing to the Supreme Court earlier this week that the administration has no unilateral legal authority, constitutional, statutory, or otherwise, to build a ballroom on the site of the now demolished East Wing unless and until Congress expressly approves. Expand on that a little bit, if you would. What is this organization arguing?
So it's essentially arguing that the power over federal property belongs to Congress. And unless Congress delegates that authority to the president, he can't do this sort of thing. He can't build. He can't spend money to construct something. So that's kind of the underlying question. And there are a couple different statutes that are involved. And then there's kind of another question that the president is using, which is to say this group, which is designed to sort of protect the country's architectural and cultural heritage, doesn't have legal standing to sue because they haven't been harmed by this. The Supreme Court in general is pretty restrictive when it comes to somebody saying, we want to sue because we don't like how something looks. And that's what the administration says is going on here.
So if the court were to decide that they don't have standing, are there other potential litigants in the wings waiting to try to refile on this, or is this probably going to be the end of this, at least for now, if the court does say you can go ahead with it?
Yeah, I think it's probably going to be the end of it. And really, even if the court, I mentioned that the stay that they're seeking is just while the litigation goes forward, but the administration has said this ballroom is 65% complete. They have essentially said it's gone so far that it would be impossible to take it down at this point. And certainly if the Supreme Court says you can keep building for another X number of months until this legal fight concludes, it's going to be so far along that it's going to be really, really hard to imagine a court coming along and saying, okay, now you have to take it down.
But Greg, is that almost a way of dodging the issue? Is that them knowing that that will be the case if they grant this stay, it will already be built, and then it will be like, oh, well, it's a fait accompli at this point. What are we going to do?
That is certainly the criticism. That's a criticism the National Trust is making and other opponents of the ballroom, that the president is just charging straight ahead. In the administration's filing the other day, they said, we are building we have 250 workers out there going 20 hours a week, 20 hours a day, 7 days a week. And yes, that is the criticism, that they're making it such that there's nothing the courts can do, even if they conclude that the president is acting illegally.
It is the thing to behold. I mean, it's been a couple of months since I've been down there, but I've seen a few construction sites where they've been moving with more celerity than there in Washington, D.C. At the White House. Before we move on, a couple of things we want to ask you about beyond this, but before we move on, we did get this decision from the U.S. Court of Appeals for the District of Columbia Circuit, that 2-1 decision that's led to this coming before the Supreme Court. As you've thumbed through that, leafed through that decision, what did you learn about the way that court has approached this issue?
Well, first of all, it was, two Democratic appointed judges in the majority, a Republican appointed judge in dissent. So it is another one of these issues that is dividing the judiciary along ideological lines. That standing issue that we were talking about seems to be the biggest sticking point. That's also something that commentators have pointed to. That may be if the administration gets this stay, that may be the reason, less than a court saying that they actually have the authority.
Greg, there's two other issues on the emergency docket. One I think is a little complicated for us, but I do want to ask you about these mail-in voting cases. You've got Alabama v. California and Trump v. California. What are these about, and are we expecting to get some sort of decision stays? Are we going to see action on them soon?
Yeah, so I've been expecting action on that for about 2.5 weeks now, and it's been fully briefed and just kind of waiting. What it's about is that executive order that you may recall from the president that would use the Postal Service to limit the availability of mail-in ballots. Essentially, the Postal Service would come up with a list of eligible citizens and would send ballots only to those people. And that is on hold because of a federal district judge's ruling. We're rapidly getting to the point, and we may well be past the point where it's too late to try to put this system in place, even if the Supreme Court were to say it's okay. The administration told the Supreme Court when it filed that we need to have this system up and running by early to mid-August. We're obviously past that now. And even if the Supreme Court were to grant the administration the stay it's seeking, there's actually still a bunch of other procedural stuff that has to happen before it can kick in, including the Postal Service actually issuing the rule that would be in force here.
Greg, in the minute we have left, I just want to ask you about what we've learned overnight here, Canada and the U.S. walking away from trade talks and now in place these tariffs that the administration has put in place based on, yes, the Smoot-Hawley Act of 1930, which scholars of the Great Depression know kicked off that sterling moment in our nation's history. We've been through the challenge to the IEEPA tariffs, seen the decision from the Supreme Court there. What is your assessment just for the legal foundation on which the administration is making this next move?
Well, there will certainly be a challenge to these tariffs, maybe multiple challenges. Big thing to remember with that Supreme Court decision, that was a different statute, and that was a statute that never mentioned the word tariffs. And so the question was, does the president have authority to implement tariffs under this law? And the Supreme Court said no. This is a statute that does talk about tariffs, and the question is whether the president is imposing these tariffs in the right way. So it's a very different legal question, and it's possible the answer won't be a black and white. It may be that some of these tariffs that he's imposed are okay and some of them aren't.
Greg, thank you so much. Greg Stohr, our Supreme Court correspondent. Also, we want to know very quickly, what is the vending machine behind you?
What's behind you? Beautiful artwork, a plant. What's in the vending machine?
So it is titled Supreme Court Justices.
Okay.
Wait, this is incredible.
Pictures of justices as of late 2005, before Justice Alito joined the court, but after Chief Justice Roberts joined the court. And I got it from a friend, and I'm pretty sure it's the only gumball machine like that.
Incredible.
I have no notes.
Greg Stohr,
thank you as always. Lovely to see you.
Greg Stohr covers the Supreme Court for us. And Christina, just a fascinating thing to watch here going forward is we see the administration kind of rebuild this tariffs wall they've put in place, and picking up on what Greg was saying just a moment ago, it will be fascinating to watch what challenges are in place. And of course, on the show, we've talked to some of the litigants who've challenged these tariffs, small businesses who have gone up and tried to get them removed. Fascinating to see what happens here.
We're going to talk a little later to some industry folks who are going to be really heavily impacted by this.
Yes, but liquor front and center here.
Topic true to my heart.
In this case, yes.
All right, now for something completely different. We're going to talk about North Korea. All right, North Korea raked in as much as $22 billion in foreign earnings over the last few years, despite global sanctions. How is Kim Jong-un doing it? And why is a richer North Korea potentially more dangerous? That is the subject of a new Bloomberg weekly documentary.
North Korea. It's a bit of an enigma. A sealed-off society on the doorstep of a global superpower. A minuscule economy, but a nuclear arsenal that commands global attention. And despite a mountain of international sanctions designed to crush it, the Kim regime has begun to thrive.
The entire North Korean government is in stronger position than at any point over the last 35 years.
Following a brief surge in 2016, crippling UN sanctions and pandemic lockdowns sent the economy into a prolonged slump. But by 2023, something changed and the regime oversaw rapid GDP growth.
North Korea's trade and overall regime revenue sources have shifted significantly. A rich North Korea has the potential to be a much larger threat.
If the world once viewed Kim Jong-un as the lonely dictator of a hermit kingdom, his recent schedule tells a very different story.
This is an amazing comeback story for leader Kim Jong-un. We're seeing Kim more powerful economically, militarily, politically than ever before.
His newfound cash is funding a massive military buildup and the Kim dynasty for another generation, potentially in the hands of his young daughter. So how did one of the most isolated, heavily sanctioned regimes on Earth pull off a multi-billion-dollar economic turnaround?
Fascinating film, Washington Full at Bloomberg.com/videos. And you saw Adam Ferrer in that with our geoeconomics team. We're going to talk with him tomorrow about some of the broader issues at play here when it comes to North Korea's influence in the Pacific.
Yeah, we're back to North Korea again this week after the president announced the cessation of some of those drills with South Korea.
Yes.
And it's impacting what they're doing and what that policy might look like going forward.
All right, coming up here, the U.S. and China neck and neck in the artificial intelligence race. That's coming up here on Bloomberg this weekend on Bloomberg Television, Bloomberg Radio, Bloomberg.com, and the Bloomberg Business app. Stay with us on this Saturday morning.
For now, we are not AI, and we will be here when you get back.
Guaranteed.
Thanks for joining us live on Bloomberg this weekend. I'm Alexis Christoforous. Let's update you now on today's top stories. President Donald Trump's 50% tariffs on some Canadian goods are now in effect after the U.S. and Canada failed to reach a last-ditch trade deal. The new tariffs target $20 billion worth of products, from hockey sticks to wine. Canada promises to match the tariffs dollar for dollar, both U.S. and Canadian officials blaming the other side for the trade talks falling through. TikTok has agreed to pay $400 million to the U.S. to end a lawsuit alleging its platform violated children's privacy. The 2024 lawsuit by the Department of Justice alleged TikTok and its parent company ByteDance collected data on millions of users under the age of 13 without parental consent. Since the complaint, the U.S. government says TikTok has undergone significant changes to its ownership, its management, and privacy practices. The U.S. Open kicks off tomorrow here in New York City, but this year's tournament will be missing the world's top-ranked tennis player, Italy's Jannik Sinner, pulling out of the U.S. Open tournament yesterday because of a right knee injury that's sidelined him since winning the Wimbledon title. But Sinner's rival, Carlos Alcaraz, announced he will play following a 4-month absence with a wrist injury. This year's total prize purse is a record-breaking $108 million that will be split amongst the winners of the Grand Slam tournament. I was really hoping to see Sinner and Alcaraz go for it,
I'll
but
be able to.
yeah.
Ugh.
Wish
I
him
hear
well.
the tickets are very expensive this year.
A lot of backlash because the tickets are the most expensive they've ever been.
Yes.
See, this is why I don't do things.
Too costly.
Everything has gotten
There is the free
so
day at the
expensive.
beginning, though, isn't there? You can
There's
go wander around.
free fan week starts
yeah.
this week, except people are saying, wait a minute, it's free. Why do I have to get a ticket that you don't pay for and it doesn't guarantee you entry? There's a lot of hoopla around it all.
I will make my own honeydews and watch on TV.
Right.
But this one I will watch, though. You give me a hard time. This sport
You'll
I will
watch
watch.
this one.
Okay.
Okay.
Thanks,
Alexis, thank you very much.
You
Appreciate it. Well, it's China versus the United States in the battle for AI dominance, and China is closing the gap. In fact, when it comes to usage and cost, China is now in the lead.
Of course, this is causing concern in Washington, Wall Street, and in Silicon Valley, where U.S. companies are, including Anthropic and OpenAI, are chasing trillion-dollar valuations. Luz Ding is on a team of Bloomberg reporters who have done a deep dive into this fierce competition between the U.S. and China on AI. Luz joins us now. I want to do justice to all the data-driven research you guys did. It's really, really
Beautifully
cool.
presented as well.
But first, I want to start with this chart, which basically shows how close these two countries are in equivalencies with these AI models. I know you broke it down into different sectors and different types and which country is better at, but can you just give us the top lines, what you found when you dug into capacity and usage of these models and cost? I know cost is a really big issue.
Yes, of course. Thanks for having me. So yeah, as we can see from the graph that you just showed before, that the gap between the U.S. and Chinese top models have been narrowing. It was narrowed from over a year to now just a few months, especially after the recent breakthrough from China's moonshot's Kimi K3 model release in July. We're also seeing the usage of Chinese models around the world increasing. One of the data points that we used was from OpenRouter, one of the major AI access platforms. We're seeing the use of Chinese models reached over 60% in July, and in the month before, the use of Chinese models surpassed the U.S. models for the first time on the platform. And then it's worth noting that the users they don't have to send data to China or Chinese models to use these Chinese companies to use Chinese models, because most of the Chinese top models are open weight, meaning that these models can be downloaded, modified, and deployed anywhere needed. So a lot of the use that we're talking about, especially the use of the models in the US, we're talking about Chinese models deployed in data centers in the US or Canada and run by US companies.
You're putting all of these models through their paces, and my favorite test you did was asking them to create a fictional e-commerce site called Bloomberg, a coffee site, fake e-commerce company. Just sort of explain the difference between how each of these models approach that, maybe in terms of what they were able to create and also the costs associated with that when you compare kind of the US models to the Chinese models.
Yeah, we see a lot of benchmarks and rankings and scores, but it's difficult to see how actually they perform. So we gave this one prompt, as you said, to build a coffee shop website to some of the leading models. And then what we find, first of all, building a e-commerce website seems not to be a difficult task for most of the models available right now. It's not challenging for the top ones, but it's also not challenging for the lower tier ones. Most of them we have found are able to build functional websites that we need. But then now we're also seeing, for example, the prices are quite different. For example, for Anthropic's model Fable 5, when we asked it to build a website, it was able to deliver a very sophisticated website within an hour, and the bill was about $50. That's already pretty good for a website, but then if you use China's Kimi K3 model, then you can build a similar website for just a quarter of the price. And then if you want to sacrifice a little bit of the graphic design, and then you want to wait for longer hours, you can go even below $5 for their website, and they can still work. Yeah,
so you're gonna have like
the Sheen version of the website,
yes,
but it sounds like the Sheen version is pretty okay.
Yeah. I think in the end, it really up to how fast you want the results in the first take, and how good you want it to be, and how much you want to pay for that perfection and speed.
There are also places that it seems like the Chinese models are actually outdoing the US models. Can you walk us through the different categories? You looked at coding, you looked at finance, you looked at banking support. Where are the Chinese models really excelling?
Yeah, so it depends on how you use it and which industry that are more adapted to the models. I don't think from the graphics that you saw in our story, there are rankings of different ways, and then if I could remember it correctly, on the finance service side, there are more Chinese models leading in the top 3, whereas in some other categories, there are only 1 Chinese models in the top 10. But then Chinese models, its real advantage is in the price, because it can be capable enough to address a lot of the questions and tasks that we encounter in real life and also in working places. So with the capable enough capability, and then also the very low price, it's become very irresistible for a lot of companies to adopt. including some of the top U.S. tech companies like Airbnb, DoorDash, and Coinbase.
Lisa, I want to go back to something that Christina mentioned at the top, that this is kind of in the crucible of a couple of these AI companies poising to go public, so Anthropic and OpenAI. And it makes me wonder just sort of how important this metric of being the best is. That if you look at these side by side, they're both quite good, the Chinese models and the US models. How important is it from a business perspective, a financial perspective, that Anthropic and OpenAI maintain this kind of vanguard position here as they go into their IPOs?
Yeah, I mean, as of now, OpenAI and Anthropic are still the best, building the best models, the most capable models, and there's still a lot of money being made by them in the current market. And then also the data that we saw, they're not a full capture of all of the global AI use, because OpenRouter is just one platform. There are a lot of other platforms that offer these services, and the use of Anthropic and OpenAI's API, the use of Anthropic and OpenAI's service is not trackable because it's with their company. And then I would say that it's hard to say like how, for example, of course, if you were the best in the category, you are always you're attracting more investors, but at the same time, there are also another market that's to be tapped, is that those companies smaller companies or companies in developing countries, they may not be able to pay that high price that Anthropic and OpenAI are charging, and then now they look at, and then they can choose Chinese models which are like increasingly capable, and then they offer much lower price, and they are open weight, so you can deploy it locally. So that's a market that Chinese models are trying to conquer, and they're already succeeding in a lot of places.
Luz, thank you very much. Great to have you join us. I know it's late in the day there. I really appreciate you joining us here in our morning here in New York. Really appreciate it. And you can check out her piece, a Bloomberg Big Take, on the terminal and at Bloomberg.com/Big Take. Really just fascinating to watch.
It's worth the purse. I really appreciate the data, because it really does kind of break it down for you. Also, I mean, it's a good thing you brought up. Like, is good enough enough, right? I mean, when it comes to us, I feel like there's you, and then I'm good enough. I'm also here.
I opened the door to that and feel sad that I did.
All right, I think that's you.
All right, if you're looking for love, you might want to try LinkedIn. Professionals are using the networking site to link up after their 9 to 5. Explore live streaming news and interviews, all our TV shows at Bloomberg.com.
Welcome back to Bloomberg This Weekend, or BT Dubs. Don't. I'm Christina Ruffini with David Gura, and Alexis is here with some of the stories you might have missed this week. Alexis, what you got?
You guys have a thing going with the BT
she says
Dubs.
I said, W. Yeah. More of a purist, more syllables. Whatever.
Do you want to weigh in? You're going to say Switzerland.
Yeah,
I'm Switzerland, thank you. And I'm going to start with a Wall Street Journal article that I think a lot of people can relate to. Ghost job ads are getting so bad, lawmakers now want to ban them.
Explain what this is. What's a ghost job?
So you know how it goes. You see a great job listing. You're like, oh, this has a lot of potential. This could be amazing. You apply. You do the cover letter, the resume specifically for that job. And then crickets. You hear nothing. And then maybe you'll see that ad reappear months later. Ultimately, you find out the company, even if you're able to find out, never actually filled the position.
But then what's the point? Why post it?
So there are thoughts on why that might be happening. Some say it's to build a pipeline for jobs that might open up someday.
So maybe it would lead to something.
Maybe. Or in case, they do these interviews and they reel in sort of their dream candidate. Others, there are cynics out there. They say employers are posting fake roles to convince investors and employees that they are healthy and growing. Or get this, which is really upsetting, they want to collect data. So they put these job postings out there.
It's a data grab.
1 in 5 jobs advertised on digital job boards like LinkedIn are ghost jobs.
Wow.
1 in 5.
Crazy.
20%.
So now lawmakers in New York and PA proposing bills that would require employers to list hiring timelines, and then they would have to remove that job once it has been filled. Texas's Attorney General is investigating LinkedIn. He says they're actually profiting from these fake job postings.
They charge per post, right? That's interesting. Yeah. I tell young people, if they're cold applying for jobs, never just send in a resume. Like, find somebody, email somebody, like make contact with someone at the jobs, even if they can just help make sure someone looks at your resume.
Knock on the door.
I've done that.
Wow.
Send them some pizzas.
Oh.
You know.
That I've not done.
Get on their
but,
good side.
You know, never say no to a carb.
Okay. All right.
Exactly.
What else you got?
All right. This is also another LinkedIn-related story from the Journal. LinkedIn has accidentally become a dating site.
A dating site.
Despite its no romance rules. Oh, no.
Oh, there are
Hand
rules?
in head for
There's
Christina.
no romance rules.
There are no romance rules.
Hand in head. We didn't get that on camera.
Okay,
so back and show that.
I know what's coming my way. I'm bracing.
cranium.
Alexis, keep
Look,
going. Keep
this
going.
should not be a surprise, right? It's a public-facing platform.
Yes.
You have clear
Verified.
headshots.
Verified.
You
Sure.
know that people are. How ambitious are you? How
Yes.
many jobs have you changed? What
Find
can
out
you
the
tell?
salary range as well, if that's of note.
Always a bonus.
Yep.
So a survey found about 1 in 4 professionals believe using LinkedIn as a dating tool can be acceptable.
25%. I keep reiterating these. You do, the one.
And wait a minute, this is even
Yes.
better. 22% have reached out or responded to someone on LinkedIn with romantic intent.
Ooh.
Can confirm that is a thing that happens.
In network, it happens.
Can confirm that is
Go
a thing
on.
that happens.
Now,
You don't have to.
there is a dating coach, I'm awful clamped, in this article who says that it's not bad news to do this, but you have to have some decorum. They say pick up lines to avoid. Are you single? I hope this isn't too weird, but, and then the always creepy, you're gorgeous.
Oh, wow.
So just stay away from those lines.
I have gotten the hope this isn't too weird, but that's the one I've gotten a couple
I
times.
find that my non-romantic outreach on LinkedIn is all AI written. Surely there's AI prompts that can do this for you as well.
Well, people are using AI to chat with each other on dating apps now too. So
that defeats the whole purpose of getting to know the person.
Where's the romance in that?
But then again, it is nice to know that the person you're going out with is gainfully employed.
Yes.
So, there's
We're
drawbacks to
working
everything.
that one out.
There's something
So
to
you got-
it.
To
They've
everything.
got that verified badge. What else you got, Alexis?
All right, let's move on to the New York Times for this is the headline. I've hit my limit. Some New Yorkers opt for fun at home to save money. Look, let's be honest.
We were just talking about this with the floor team before we came on. Go ahead.
Oh, good, Sam. I'm glad I'm with the zeitgeist here
Yes,
and
you
choosing
are.
these. So
Finger
a lot
on
of
the
young
pulse.
people living in New York City, it has become cost prohibitive to go out and socialize. According to the Fed, the bottom 40% of U.S. earners have little to no discretionary income. And you know what? Bump that up here in New York City.
Yes, very difficult.
Salaries here are not keeping up with the necessities, never mind going out and having a cocktail. Do you know that a simple pastime like a basketball game?
Yes.
Going out, getting a drink, going to the movies can be like a $40 ordeal
It's
if
like,
you
well, it's
get
like a domestic flight if you have a family.
Yeah. I don't know how people do this. I mean, I joke that if I step outside my apartment, it's going to cost me at least $200 these days.
Yeah. No joke. So they're calling it housing hangs. They're calling it, I don't know where you're going with a $200 drop, maybe $40. Maybe you walk out the house, it's like $40.
Listen, I have a shopping problem.
Yeah.
We don't need to get into that right now.
Okay. So they call them housing hangs. What do you do at a housing hang? You tell people, BYOB,
Okay.
whatever makes you
All
happy.
right.
Bring your own beer, wine, whatever, drinks, snacks. Let's play board games. Let's bop out the cards. Let's
Roll
do
the
something,
Yahtzee.
But I will
roll
say,
the
I was-
Odyssey.
So we were just
Roll
on
the what?
vacation.
Yahtzee.
Yahtzee. I'm saying
I got an Odyssey, though. I do have an
Yeah,
Odyssey.
the
I'd roll
Yahtzee.
that.
Okay.
Take
We were
the
just
car.
on vacation. I was in London, which is a notoriously expensive city.
Yes.
Going out to eat and drink was substantially less expensive, even with the currency.
Really?
You can get a glass of wine for £6 to £8. You can get a good, nice meal for £25. And it was a breath of fresh air. I
When
just kept
London
waiting
looks
for
like
the
a-
check shock to come,
Yeah,
and
yeah.
it would come, and I would be like, oh, okay.
All right.
All right, we have time for one more.
One
quick.
more, yes,
Wall Street
please.
Journal. A mother-daughter from Maysville, Kentucky,
Maysville.
turned down an offer to sell their farmland, which has been in their family for 200 years, to a company for $26 million. Wow. Why? At first they said,
$26 million
At first they said,
in
yeah, okay,
Maysville.
we'll do that. But they went, you know what? It's for data centers to fuel
Oh,
AI, and they
wow.
said, we're not gonna do it.
Not going to do it.
And so the family's sitting tight on their farmland.
Wow.
That's a
This,
tempting offer.
encapsulates the political debate.
Yeah, a
happening
lot
in
of
the country
controversy
right now.
in this small town in Kentucky. Some people are selling. We don't know who the person is, who the company is, but this report says it's Meta,
Okay.
Facebook's parent company.
All right.
It's really interesting. The debate used to be, selling your land to mining companies or selling your land to, oil frackers, and now it's selling your land to data centers.
Data centers. Alexis, thank you very much. PTW here, as we call it. All of us here on the show weekly, giving us a look at those stories you may have missed on the Bloomberg terminal at Bloomberg.com and at other sites as well.
All right, we're coming up at 8 a.m. here in New York. The next hour of Bloomberg This Weekend starts right now.
Welcome to Bloomberg This Weekend, live from New York with David Gura, Christina Ruffini, and Lisa Mateo. The latest headlines, key analysis, big interviews, and the stories that hit home on your days off.
Welcome back to Bloomberg This Weekend. It is 8 a.m. in New York, coming to you live from our world headquarters here in Manhattan. I'm Christina Ruffini.
I'm David Gura with Alexis Christoforous and for Lisa Mateo this week. We're bringing you the latest breaking news, reporting and analysis live this morning and every Saturday and Sunday from 7 o'clock to 10 o'clock Wall Street time. Of course, major undulations in the bond market over the course of this week, a huge story. Compounding that, the news that we got out of Washington late last night that these negotiations taking place between the U.S. and Canada failed. They fell apart at the last minute,
Rather
and now we see tariffs going into effect.
Right, and we've got both sides essentially blaming each other, and Canada saying that they will fight back if these 50% tariffs do indeed go into place. We're going to talk about that. We're going to talk about bonds. We're going to talk about all kinds of things. But first, we're going to talk about the headlines with Alexis.
And those tariffs are our top story this morning, guys. Thank you. The U.S. slapping 50% tariffs on $20 billion worth of Canadian products after talks between the two longtime allies broke down late last night. The tariffs take effect immediately on hundreds of items, including plywood, liquor, electrical equipment, and hockey gear. Prime Minister Carney promises retaliation, saying, quote, Canada will match those tariffs dollar for dollar to protect our workers and businesses. The two sides blame each other for the collapse in talks. The U.S. says Canada made 11th-hour demands that upended a draft deal that was worked out earlier in the week. President Trump was in South Carolina yesterday making a last-minute appeal for Senator Darlene Graham, his pick to replace her brother, the late Senator Lindsey Graham.
With your help this November, we're going to stop the radical left Democrat communists here in South Carolina and all across the nation. And we're going to elect Senator Darlene Graham to fight for South Carolina and to always put America first.
Voters will decide Tuesday whether Graham or Congressman Ralph Norman will be the Republican nominee on the November ballot. Supreme Court Chief Justice John Roberts is allowing the White House to continue construction on President Trump's $400 million ballroom project, at least for now. Roberts signed a temporary order yesterday allowing work to continue while the court considers an emergency appeal from the Trump administration. Lower courts had ordered a halt to the project, finding that it must have congressional approval. U.S. cattle ranchers and the Republicans who present them are pushing back on President Trump's plan to allow more beef to be temporarily imported into the U.S., tariff-free and sold at 25% below current market prices. Beef prices have climbed to record highs amid a cattle shortage, strong demand, and limits on cattle coming from Mexico. Ranchers warn that increasing imports could hurt American ranchers who are seeing rare profits. And authorities say at least 2 people were killed overnight in Ukraine by Russian drone and missile strikes a day after an attack on a Ukraine shopping center killed 16 people. Russia has been ratcheting up its ballistic missile attacks on Kyiv at a time when Ukraine is short on U.S.-made Patriot weapons meant to shoot down those missiles. Ukraine's foreign minister is calling for faster peace talks now that Europe is at the negotiating table. Guys.
Alexis, thank you very much. Appreciate that. Well, new tariffs between the U.S. and Canada in effect this morning, as Alexis just mentioned, as trade talks between the U.S. and Canada broke down last night. Without a deal, Canada faces a 50% levy on key exports like plywood and liquor, even hockey equipment. Canada vowed to match U.S. tariffs dollar for Canadian dollar.
The breakdown in talks escalated an already tense relationship between the two once friendly neighbors. In a statement on the trade talks, Trade Representative Nathan Grawe said demands and walkbacks of other commitments by Canada have upended the careful balance reached in the past days. Canada's Prime Minister Mark Carney took a hard line, saying Canada has what the world wants, and we will not allow any nation to determine our future.
The trade news comes at the end of a chaotic week for the U.S. economy. Wednesday, Treasury Secretary Scott Bessent announced the Treasury would more than double its buybacks of U.S. debt in an effort to reduce long-term borrowing costs. We're joined now by Barry Ritholtz, Ritholtz Wealth Management, of course, host of the Masters in Business podcast. Barry, great to see you. And I want to just get your perspective on the significance of this move, Canada walking away from the table, the U.S. walking away from the tariff. We were talking to Jonathan Levin, columnist for Bloomberg Opinion, in the last hour, and he said, you know, he's astounded at how markets seem to be shrugging this off, that, you know, several years now into Trump term 2, after the first Trump term, this is kind of old hat. They've learned to operate kind of not paying as much attention to these tariff developments as they might have in the past.
Well, especially in light of the fact that the IEEPA tariffs, the prior set of tariffs, the administration lost literally at every level from the Court of Trade right up to the Supreme Court. There is absolutely no reason to believe the 338 tariffs are going to survive close scrutiny. This is in the Constitution. Duties, taxes, levies, including tariffs, are the province of Congress, and Congress has not delegated this authority. So when I look at what Canada's doing, the assumption is, hey, we're just going to run out the clock until the Supreme Court gets around to striking these tariffs as well. And I think that's why the markets are looking at, you're still doing this tariff stuff. You already lost that.
I feel like this is the frustration I have with the markets and the Iran announcements every Friday when we go, we're going to get a peace deal, and the markets react, and then by the next week it's falling apart again, but I digress. I would like you to explain to me what is going on with bonds. I hate bonds. They confuse me. I'm working on bonds. But you have, David's been listening to me complain about this all week, but you have the Treasury trying to buy back these bonds. Essentially, U.S. debt had an all-time high. This is, my understanding, a short-term solution for a longer-term problem, right? Is it going to work, and is it going to cause more inflationary issues for the Fed down the street to then try to have to solve?
There's a couple of issues here. The deficit and long-term debt, they're just part of the issue. The other issue has been that we've had very persistent, sticky inflation, primarily driven by the combination of a massive fiscal stimulus during the pandemic. We're still suffering that overhang, as well as a lot of snafus with the supply chain. And by the way, all of the mayhem around tariffs on, tariffs off, what country can send stuff without tariffs, what can, has very much interfered with the normal flow of goods. And so that's making inflation all the more stickier, to say nothing about energy prices and the war. So the question becomes, what can the government, what can the central bank do about it? And you guys got the answer on your own. Short term, sure, they can have some temporary effect, but the bond market is a $100 trillion global market. There's only so much any one country can do to maintain yield prices, bond prices, over the long haul. The market sets the long-term bond yield, not the Fed, not the Treasury.
Such a fascinating moment when the Treasury Secretary was talking about this, Barry. I don't know if it caught your ear, but it caught mine. Him talking about he thinks the market's mispricing the fundamentals of the bond market at this time. And I wonder what you make of that, and just sort of what you think the Treasury Secretary has up his sleeve. A lot of ink spilled this week about him being from the buy side. This is just a new approach to this job, running the world's largest economy. But maybe just a broader question I'll throw to you first here is what are the moves that we saw this week, coupled with what we saw with the yen intervention, say just about Scott Bessent's attitude toward the U.S. economy going forward and the kind of muscular nature of his approach to the job as Treasury Secretary?
Look, he's doing what his job is, which is to try and jawbone the market into submission, to try and get people from recognizing that, hey, we're in a weird situation, but we'll get past it. The yen intervention and then the Treasury intervention this week is a way to show that he's in control. There's been this long history with the White House and the Fed begging for lower rates, and the Fed has a dual mandate, and inflation is half that mandate. So when you have higher than expected persistent inflation, they're not going to drop short-term rates, and the bond market is going to do what it's going to do. So Bessent is doing his job. His job is to, not only jawbone the market, but cheerlead the economy and say, we're doing fine overall. Here are all the positives, and everybody should just catch their breath. Eventually, rates come down. That'll help shrink the carrying cost of the debt, and everything will be fine. And he's not completely wrong when he says that. That's a legitimate argument.
I am curious kind of how you dovetail this with the stock market. There's been so much focus on the bond market, of course, over the course of the week, given where the intervention was. But what does it mean for the stock market? And are you surprised that we didn't see more reaction in stocks to what the Treasury Secretary did this week and the way it kind of, I guess, equilibrated here by Friday?
Look, we're within a few percent of all-time highs. The past 10, 12 quarters has been very consistently showing increases in revenue, profits, and even more importantly, profit growth, the rate of profit. And it's not just limited to technology and AI. You're seeing it pretty broadly across all sectors. We're seeing signs that the hangover is starting to come around and the cost of expensive credit is having an effect. You're never happy when you see a company like Walmart disappoint and say they're not seeing the growth they were expected. That's telling you, like you guys were discussing earlier, the bottom half of the economic strata is having a hard time. And it's not just New York City, it's across the country. The one area where I'll disagree with the Treasury Secretary is that, no, the K isn't closing. If you're in the top half of the economic strata, you're doing pretty well. If you're in the top third, you're doing great. And if you're in the bottom half, you're having trouble making ends meet. You know, putting food on the table, putting fuel in the car, it's just more and more expensive. And that economic demographic is having a harder and harder time finding discretionary money to spend. And that's having an impact, at least in terms of the current environment, which on the labor side has kind of been a no hire, no fire labor market. We see the negative aspect of that in sentiment. We're now seeing it manifest in retail sales.
Barry, before we let you go, I want to ask what your take is on the competition for U.S. Treasuries with these tech bonds. You know, the building AI data centers, it's seen as a pretty secure investment, and it's giving some competition to Treasuries, especially in the shorter yields. Do you think this is going to sustain even as AI skepticism grows a little bit, or do you think it's going to taper out?
You know, I always, my spidey sense always starts to tingle whenever anybody says, well, it's not backed by the federal government, but it's just as safe as Treasuries. No, these aren't as safe as Treasuries. Hold aside all the issues on the circular financing or whatever you don't like about AI. It's a corporate issuance. It's a complex set of structures, and it's very subject to technological disruption. The whole history of Moore's Law tells us that the chips get smaller and smaller and smaller. You put more and more transistors on them. These massive data centers that are doing these 10, 20, 30-year financing, I don't think 10, 15 years from now, the size of the hardware in the data centers are going to be nearly as demanding as they are now. I'm wondering if we're eventually going to overbuild the footprint here. Every new technology comes with a whole lot of over-allocation, misallocation, and when you come out the other side of that, you end up with cheaper, more affordable tech. Think of fiber optics and all the dark cable that was laid so expensively, and then became really cheap after the dot-com implosion took all those companies out. Yeah. I wouldn't be surprised that 10 years from now, we're looking at something similar in the data storage. So yeah, there's a little bit of competition, but safe as Treasuries always makes me nervous.
Very great to talk to you on this Saturday. Appreciate it. Barry Ritholtz there, host of Masters in Business. Alex Moore is his guest this week. Do check out that podcast at Bloomberg.com.
Also the owner of an excellent kitchen for our television and internet viewers. All right, we're going to go now to Derek Decloet. He's Bloomberg News executive editor for Canada. Derek, we've been talking this morning about the kind of surprise dissolution of these trade talks, what it means for Canada, what it means for the economy. But I do just want to ask you how Canadians are feeling this morning. I do get the impression we've treaded on the patience of our northern neighbor quite a bit recently, and we might be getting some pushback.
I think that's accurate. It's maybe hard to fully summarize the national mood at 8:15 in the morning, but I think that you could probably say it's frustration, but not necessarily great surprise. I mean, everybody knows that there's a certain negotiating style that the Trump administration brings to the table. Brinkmanship is often a part of that, and we have seen on a number of occasions before talks between the U.S. and Canada specifically on these issues go off the rails. Last year, they were making progress toward a deal that would have lowered tariffs. This was in October. And then on a Thursday night, the president posted on social media that all the talks were terminated, and he was angry at that point. He said about the Ontario government's Ronald Reagan ad. So I don't know that the level of surprise here is all that great.
Derek, what happened so much as we know it? So these talks, I checked in with Josh Wingrove, I think around 10 o'clock last night. Talks were still continuing. Do we know what the particular issues were that caused these talks to break apart? And indeed, it seems like each side is pointing the finger at the other for walking away.
Yeah, we don't know in the specifics yet. I think that a lot of that will emerge, but we've known all along that it will be difficult to solve the so-called Section 232 tariff issues. Those are the ones that deal with U.S. tariffs on autos and steel and aluminum. That's the big sticking point for Canada. What are you going to give up to get those tariffs lowered? Since the Trump administration is not going to take those tariffs to zero. And as you said, each side last night accused the other of throwing in new demands at the last minute and sort of jettisoning the deal. So we don't know yet exactly what went on, but we know that we're going to get two different versions of what went on last night.
Mm-hmm.
Derek, I'm wondering if, aside from this issue, which is of course a huge issue, if the communication between the Canadian government and Washington has gotten any better. Because I know when I was talking to folks the first time around, I was actually getting calls from members of the Canadian government asking me if I knew what their effective tariff rate was going to be, because Reuters seemed to have more information than they did. Have those lines of communication improved at all? Or is it still you don't know what you know until it's announced over Truth Social or in the room?
Oh, I think the lines of communication have changed dramatically. And in fact, and gotten much closer. And in fact, last night, U.S. officials talking to us indicated that the talks, they weren't necessarily acrimonious. I mean, there have been weeks of meetings at the very highest levels. Mm-hmm. Jameson Greer on the U.S. side, Dominic LeBlanc, who's one of the most senior cabinet ministers in Canada, responsible for this file. On the other side, Canada's chief trade negotiator. So they're now talking. There's not surprises between them. I would say that's sort of a big change.
Derek, great to speak with you. Thank you very much for that update here on the Saturday morning about those talks that fell apart yesterday. He, our executive editor for Canada, joined us on Saturday morning here. And I'm drawn to this line at the end of the piece that we have on the Bloomberg terminal about the dissolution of those talks. University of Calgary estimate that if these tariffs remain in place, Canada could lose almost 90,000 jobs, something we'll be covering here in the days ahead.
All right, coming up, we're going to speak to the former head of British intelligence. He weighs in on the future of spycraft. That's ahead on Bloomberg this weekend. Stick with us.
Thanks for joining us live on Bloomberg this weekend. I'm Alexis Christoforous. Let's update you on today's top stories. President Trump is promising an economic D-Day against Iran as the war drags into its 6th month and as the U.S. faces dwindling stockpiles of key weapons. Former U.S. National Security Advisor John Bolton tells Bloomberg's Balance of Power the president has lost his way with the war.
The problem we're in now is the president didn't think through what his objectives were, didn't take adequate steps. He's been on again, off again for months now. And I think the Iranians see weakness. They see his concern for the upcoming November elections, and they're trying to play off that.
Bolton says the U.S. should use military force to open the Strait of Hormuz. Meantime, Iran's president is calling for an end to the war, saying Tehran holds a position of strength as diplomatic talks remain stalled. California Governor Gavin Newsom says he prefers a settlement of the state attorney general's lawsuit opposing Paramount Skydance's acquisition of Warner Brothers Discovery. Quote, if it's a good deal. Newsom weighed in ahead of planned talks Monday between Paramount and the states challenging the $110 billion merger. Paramount CEO David Ellison is threatening to move the company out of California. A board vote could come as early as October. And Apple is cutting jobs across teams responsible for the Siri digital assistant and the Vision Pro headset as the tech giant focuses on new devices and artificial intelligence. The cuts affect more than 200 people. The revamped Siri AI is expected to be rolled out in September alongside the new operating system, iOS 27. Christina and David.
We talked about the efficacy of Siri. We've got Tim Cook, I think, on his last few days as CEO of the company, getting ready for that leadership transition. This, I think, a crucial part of all of that.
I desperately need an iPhone, so
we'll see. Get a new one. Thank you very much, Alexis. Appreciate it. The French newspaper L'Express recently asked Europe's top spies which country has the best clandestine agency. The winner? MI6, and the runner-up is France's DGSE. The Netherlands, Ukraine, and Germany round out the rest of the top 5.
That's right, but how has a spy game changed in the modern era? Is AI making the job harder or easier? And where does the CIA factor in? We sat down with Sir Richard Dearlove, the former head of British intelligence and co-host of the One Decision podcast.
I mean, if you look at the European intelligence agencies, for largely historical reasons, there's no question that the United Kingdom in MI6 has, let's say, the agency with the broadest international remit, with representation in many countries, and with a depth and length of experience which is unmatched by any other European service. I mean, bearing in mind MI6 is a historical creation that goes back to 1909, and there's no other European service that has a history with that depth. So I'm not surprised. Of course, it's the best European service. I would say that, wouldn't I?
Why is human intelligence so important? What makes it so valuable?
Because I think you can only really find out the sort of detail of what you're searching for by talking to the people who've actually got access to the decision-making process in the foreign government. So let's say the current war in Iran. I would imagine that, let's say, Mossad has human sources amongst the Iranian leadership. You therefore get a much more integrated and clear picture of how the leadership of the IRGC is thinking in the conduct of the war. I mean, intercept can be valuable and really important, but you might only have a partial picture. And, you know, data analysis doesn't give you that human dimension.
Is it getting harder to recruit and train people to be successful operations agents? I mean, do people still want to be spies? It seems like in an era where everybody wants to tell everybody everything, is it hard to say to a smart young person, we want you to do a lot of risky, amazing stuff, but you can't put it on Instagram?
Yeah, I guess that's a good point. But I think if the career is regarded as prestigious, if the career offered is good. I mean, I can honestly say I was in MI6 for 38 years, and despite the discipline, the restraints, the secrecy, I probably never had a boring day at work. How many people can say that in a 38-year career? So there is an attraction. I think it requires a special type of character, you know, that's suited to the work. Of course, not everybody is, and the selection is pretty fierce. But certainly in the UK, it's maintained its reputation of an attractive career. In some other countries where the intelligence community has been more politicized, I wouldn't say that's necessarily true.
Well, speaking of, I'm wondering what your assessment is right now of cooperation between MI6 and the CIA. I know when you were head of the agency, you spent a lot of time in Washington. You spent a lot of time both in Langley and in the White House. But is that cooperation as good as it used to be? And does the CIA have a retention and recruiting problem at the moment?
Well, the last of your questions first. I'm told that the CIA does have a recruiting problem at the moment. But that's maybe because there has recently, I think rather shockingly, been a purge of senior officers on the basis of the degree of their loyalty to MAGA republicanism. I mean, it shouldn't be a party issue, but I think it's become so. And I think the previous or departing DDO, that's the head of the operational bit of CIA, I think he was called Tom Sylvester, who should have finished his career in London, has been denied the job and has retired because it wasn't absolutely clear that he was a sort of uncritical MAGA Republican supporter. I find that very alarming. and not good for the service at all. I mean, the tradition in MI6 is that you work, whatever the party is in government, that you don't express a political opinion. And okay, you're denied that opportunity publicly to advertise your own views, but that's part of the discipline of being a national intelligence officer. And I think the CIA at the moment certainly seems to have a problem. I guess that will pass because it has a tradition of producing and training very capable field officers.
When you look at other intelligence agencies, including MI6, at the moment, do they trust the CIA? Do they trust sharing intelligence with the United States?
Yes, I think they do. I would say that over time, there have always been issues of complexity in those sorts of relationships because there can be divergence in political aims and there can be problems which arise sometimes which are not publicized. I mean, during my time, although we were very, very close to CIA, I'm talking about 9/11 or let's say the war in Afghanistan, war in Iraq. If you go back a step before that, there were problems between the UK and the US over the conflict in the Balkans, where there were policy differences and problems arose which were more of a political nature. This isn't unknown, but I mean, I would have thought that both sides will be trying to make the operation work, but sometimes you have a view in the White House, or maybe you have a view in number 10 Downing Street, which can cause problems. I mean, these relationships can be quite complicated. And, objectives, particularly short-term ones, can diverge.
Would you still recommend a career in intelligence for a young person, either in Washington or in London?
Yes, I think I would. I mean, if you're interested in geopolitics, if you're interested in the state of the world, if you are cool-headed, if you feel at home in foreign countries and you are comfortable in those sorts of environment, that career can still offer a lot. And I think maybe some of the current difficulties that may have arisen between Washington and London, I wouldn't like to overemphasize them. I think the relationship is still quite close on the intelligence side. Probably, these things come and go, and I'm sure that the present administration in the US, I think we regard as something of an aberration. But there are still areas of cooperation which are hugely important.
Maybe I missed my calling, although I do like to talk. I'm not great at keeping secrets. Sir
Christina,
Richard,
I think you would have been great at the job.
Thank you. All right. Well, maybe I'll circle back. Sir Richard, it's so nice to see you. Thank you so much.
I don't know about that. I was trusting everything he said until the end when he was like, he'd be very good at the job. I'm not sure about that.
He's a very polite man. Can you just let me have this?
Shrewd, perspicacious.
Would you have made a good spot?
I would not have, mostly because of all of the restrictions he was talking about. And I also like to talk, and I don't know. I
think the operations part of it are very similar to journalism, right? You got to get people to trust you. You got to get in the field. But the back end where I want to tell everyone everything.
Whenever I watch like old spy movies or read old spy novels, it seems like you had a level of, anonymity. You could cultivate a level of anonymity or a different identity you can't really do now.
I do wonder how they do that, especially
undercover.
As I was just traveling. Everything is facial recognition now, and everything is digital. I don't know if it's easier or harder, but he won't tell me.
Well, sworn to secrecy.
It's very
good conversation. Interesting about that. How he said, the relationship between the U.S. and the UK spy agents, goes ups and downs. I think he put it. There's cycles to it.
Like the special relationship overall.
Indeed.
I think.
Pulling back more.
All right. Here's something I don't want a special relationship with. Robots. It's robots against the world at the World Humanoid Robot Games. That's right. You heard me correctly. And Bloomberg has a team in Beijing.
Robots that can sing, dance, and do kung fu. That's all passé at this year's World Robot Conference in Beijing, where thousands of companies are here to showcase their latest humanoid robots. But this time, we're focused on the practical uses, not just for households, but also for industry. I've seen robots that can do the work of assembly line workers, but with precision. I've seen also robots that can pick up laundry and put it in washing machines. But it's not all serious business. There are also robots that can play ping pong with you, as well as table hockey. One of the highlights at this year's forum is Unitree CEO and founder Wang Xingxing's keynote address. In the aftermath of the company's successful market debut in Shanghai, which made it China's first listed humanoid robot company, he said that humanoid robots can reach mass market popularity within a decade after manufacturers can resolve problems that hold back their usefulness. He also said that the industry can take off within 2 years once at least 80% of the tasks can be completed by robots. This is Alan Wan in Beijing.
Wow, and we have live pictures of this. There's kind of a strictly ballroom situation happening at this convention center in Beijing right now. Humans, want to verify they are humans, in black suits dancing around these robots who are, wow, look at the moves on that.
I will say the fluidity of those movements.
Less rigid than I worried it would be.
The technology and just like the kinetics of these.
Oh, now I'm worried. What's happening here?
All right, so now we're looking at robots that don't have legs. They have kind of a wheelie base, and they're all doing things in unison. I mean, this is dystopian nightmare fuel.
For our radio listeners here, just want to emphasize how many of them there are.
1, 2, 3,
on
4.
what looks like an indoor track, dozens and dozens and dozens of humanoid robots. This is our future. Future is now. I think what Evan Osnes was telling us, China seems more inured to this than perhaps we are, just because I think they've embraced.
Yes, this engenders apparently less fear there than it does, at least at this desk.
At this table, yeah.
At least
All
on
right.
my side of this table.
Conference continues. Coming up, Canada's U.S. booze boycott has no end in sight. We're going to talk to the CEO of the American Whiskey Association. You don't want to miss that. Coming up next here on Bloomberg This Weekend.
Thanks for joining us live on Bloomberg This Weekend. I'm Alexis Christoforous. Let's update you on today's top stories. President Donald Trump's 50% tariffs on some Canadian goods are now in effect after the U.S. and Canada failed to reach a last-ditch trade deal. The new tariffs target $20 billion worth of products, from hockey sticks to wine. Canada promises to match the tariffs dollar for dollar. Both U.S. and Canadian officials are blaming the other side for the trade talks falling through. TikTok has agreed to pay $400 million to the U.S. to end a lawsuit alleging its platform violated children's privacy. The 2024 lawsuit by the Department of Justice alleged TikTok and its parent company, ByteDance, collected data on millions of users under the age of 13 without parental consent. Since the complaint, the U.S. government says TikTok has undergone significant changes to its ownership, its management, and privacy practices. The U.S. Open kicks off tomorrow here in New York City, but this year's tournament will be missing the world's top-ranked tennis player. Italy's Jannik Sinner pulled out of the U.S. Open yesterday because of a right knee injury that sidelined him since winning Wimbledon. But Sinner's rival Carlos Alcaraz announced he will play following a 4-month absence with a wrist injury. By the way, this year's total prize purse is a record-breaking $108 million for the winners of the Grand Slam tournament. They'll be cutting that up. And start your engines, because the Freedom 250 Grand Prix takes place this weekend in Washington, D.C. It marks the first IndyCar race ever held on the National Mall. Part of the celebration of America's 250th birthday, the free 2-day event features a 1.7-mile racetrack zipping through the nation's capital with landmarks including the Washington Monument and the U.S. Capitol as the backdrop. So it's going to be a spectacle, guys. And you know what? Don't bring your car out in Washington, D.C. this weekend.
No, and I think Reagan National closing airspace for a few. What are your peeps in D.C. saying about this, Christina?
They're not happy.
They're not
also,
happy.
Good luck to them. As someone who had to buy a tire inflator because the potholes are so bad, I regularly pop tires on my car. I hope they fixed all of those roads and hope it goes well.
All right.
Happy to be in New York this week.
There you go. Happy to be here. Alexis, thank you very much. Appreciate that update.
All right, we're speaking this morning about the somewhat surprise collapse of the U.S.-Canada trade talks. This tit-for-tat tariff debate have hit a lot of American producers hard, including American liquor companies and distillers who usually sell quite a bit of product across the northern border.
Helping us distill all of this. I'm groaning at my own comment. We have Michael Bilello, President and CEO of the American Whiskey Association. Michael, great to have you with us here. I want to just ask you about the state of play. We don't have to get into the granular details here because we don't really know a whole lot about what happened with the talks. But when you look at the business that you represent, what has the last year plus meant for them, not having access as they had before to the Canadian market?
Yeah, good morning. Thanks for having me. Obviously, we didn't get the breakthrough we were all hoping for this morning. So for American whiskey producers, this remains unfinished business. As you pointed out, for a year and a half now, American whiskey has all been basically shut out from most of the provinces in Canada. And this is something that affects the entire American whiskey supply chain. So not just the distillers, but all the way down to the coopers and also the grain farmers. So obviously we were hoping for a breakthrough. We were hoping for a deal. We were hoping to regain access to the Canadian market. Then we were hoping the provinces would align with the federal government and allow us to have access to the shelves. And we were really looking forward to reconnecting with our Canadian consumer. But obviously that's not happening.
How big of a part of the business is this that you're losing, either in a percentage or a dollar amount? Like, how big of a hunk of what you would usually sell is not there at the moment?
Well, I'll point to the White House figures that were shared. So in 2024, when the provincial restrictions went in effect, you had a market that was about $203 million when you measure that from March of 2024 when it went to effect to December. When you look at the same year-over-year comparison, it was down to $60 million. So roughly a 70% decrease in U.S. spirit exports to Canada. And by the way, American whiskey is about over $1 billion export for the U.S. economy. So at the same time, by the way, American whiskey and U.S. spirits exports grew by about 2.5% everywhere else except Canada. So to put things in perspective, this prohibiting American whiskey on those shelves really did have an impact on the category, but also U.S. spirits in general.
Mike, let me just ask you about the quality of conversation you've been having, with American leadership, Canadian leadership all through this. I imagine, many groups affected by these tariffs have been trying to bend the ear of the White House, and the U.S. Trade Representative likely trying to do the same thing with the Canadian counterparts. How engaged have you been in the process? What have those conversations been like?
Well, I could say what's really special about the spirits industry is globally, we are very connected. We see this as one ecosystem. So we are all about fair market access, competition. We want the world's whiskeys to compete, but we really do focus on market access and fair competition. So as an industry, we've always been very united and aligned on what we're looking for globally in terms of trade policy. When we look at the Trump administration and our counterparts in Canada, we're obviously equally engaged on both sides. And we were always taking part in constructive conversations and making sure parties were aligned and the impact was known and understood on both sides. Because remember something, the United States and Canada, we are part of the same North American hospitality ecosystem. So this didn't just have an impact on the U.S. side, it also impacted the Canadian side of things. So again, the industry always connected, always sharing information. We're always focused on market access. And then for both the U.S. government and the Canadian government, they've always been engaged and really, looking at the trade officials and the people who are really doing the hard work behind the scenes. Those lines were open. Communication was flowing. We received good indications yesterday that there was progress being made. So obviously to learn about this late last night or early this morning was really unfortunate.
Michael, it seems to me like you have two problems. You have the actual policy issue, but then you have a branding issue now. We had a producer who was recently in Canada and was telling us all of the shops are labeling Canadian-made products, and there is still this impetus to buy Canadian. Even if you get these products back on the shelves, Canadians are really annoyed. They're very mad. Do you think you have some work to do on the PR front to try to convince those folks to buy American products when they are kind of furious about how this all went down?
Yeah, really an astute observation. So essentially, when you're not on a shelf for a year and a half, right, you're out of sight, out of mind. So from a marketing and branding scenario, that's not the best place to be in. It's one of those things where, there's a three-step process that we're really focused on here. One was gaining market access to Canada. And obviously, that's what we were hoping the negotiations between President Trump and Prime Minister Carney would result in. Step two, then, because the provinces control the liquor boards and really the shelves, we were hoping step two would result in the provincial authorities to align with the federal government and give us access to those shelves. And then step three, which is the point you just made, is reconnecting and reuniting with the Canadian consumer. And that's probably about 50-50 right now. Like, we've heard from Canadian consumers, a lot of the bourbon enthusiasts who are very excited to be able to go to the stores this morning and purchase a bottle of American bourbon or American whiskey in general. But then obviously there's also a group out there of Canadians who are really annoyed, disappointed, and frustrated with the relationship with the United States. And that's understandable as well. So all we continue to advocate for is access to the Canadian market. access to the shelves, and the ability to reunite with the Canadian consumer. And to your point, we know it's going to take some time, but Canadians should have the choice to choose American whiskey. And we want all American whiskeys to compete there. But the fact of the matter is we haven't been able to compete because we've been kept out of the competition altogether.
Picking up on this last question, Christina's been out to Kentucky recently, done a piece on the bourbon industry. I'm curious about sort of the history and symbolism here and how you think about it in the context of this. Look, so many products are subject to these tariffs now. Why is it you think that American whiskey's been signaled out in the way in which it has? Why does it carry such symbolic value or significance in the context of this trade war?
American whiskey is a quintessential American product, right? We're celebrating America's 250th. We look at George Washington, not only one of our, great American president, but also a great American distiller. And this is a product that has a long supply chain, right? Again, it starts with American farmers who grow American grain. Then it goes to lumber, right? And Coopers, the industry that makes the barrels. And then you have the distillers. So this is a symbolic American product. When you look at what American whiskey makes up in this larger U.S.-Canadian trade deal, it's very minuscule. It's not a lot. But the symbology here, right? It became this symbol of the trade tension. It became the symbol of the dispute. There was perfectly good whiskey being poured out into the streets, which is a total sin, in my opinion. So it became symbolic. It became a symbol of the trade tension and the dispute. Yeah. But I believe it can become a symbol of reparations, and we can get back to normal. All
right, Michael, great to speak with you, and we're hoping for better days ahead here. Michael Bilello of the American Whiskey Association joining us here on this Saturday morning.
Thank you so much. All right, coming up, it's Dachshund domination. We dive into how Dachshunds have become one of the world's hottest breeds.
You can take us with us. No matter where you go on Bloomberg TV, you can listen on Bloomberg Radio, stream the show on Bloomberg.com or the Bloomberg Business app.
Welcome back to Bloomberg This Weekend. I'm Christina Ruffini alongside David Gura. All right, it is one of the world's hottest dog breeds, made popular by celebrities, TikTokers, and increasingly tiny living situations around the world. What is it? Well, we already talked about it. It's Dachshunds.
All right, from Bangkok to London to New York, demand for Dachshunds has soared. Joining us now is Bloomberg's Randy Tantong Knight, our Bangkok bureau chief, and I should say a Dachshund owner. Randy, this is an amazing piece. I love Dachshunds. I've always wanted a long-haired Dachshund. I have not yet got one. Yes,
I'm
since
learning
childhood.
things today.
How did you note this trend happening? Yes, in Thailand where you're based, but around the world as you chart out here. This is a global phenomenon.
Yeah, so it started when I got my Dachshund when I moved here to Bangkok from Ottawa, and that was late last year. And then I started noticing them more and more, and I was like, am I imagining things? And then I started looking into it, and then I started seeing celebrities posting photos with a Dachshund. Aaron Judge, Yankees captain had Dachshund Penny, and then I see a lot of TikTokers, a lot of celebrities locally as well. They post with Dachshund, and then I was like, well, I'm not imagining things. Then I started digging in through the data, and then I found that on American Kennel Club, 10 years ago, they were at 13th most popular breed. And then over the past decade, it's been growing popularity, and it reached number 5 last year, taking Poodle out of number 5. And then in the UK, it's a similar thing as well. So over the past decade, the number of annual registration has doubled, and it's now the 3rd.
This is so funny. I actually anecdotally have seen an increase in Dachshunds around New York as well. But you said there are
registered breed in the UK.
There are Dachshund cafes. You write at a cafe in a Bangkok suburb, customers can pay $9 to spend an hour and a half with more than 30 sausage dogs. Have you experienced this? Is this a business model David and I should replicate as our side hustle?
Side hustle.
Yes, well, maybe you should. Well, so I came across this cafe because I was just essentially reaching out to different breeders here in Bangkok, and then cafe, like, you should come visit. And then I went there, and they were just like preparing to open, because at that point they weren't officially open yet. But and then I went back again when they're open, and it's now super popular. They open it for the first time in June, and it's now like a must-see spot for tourists. Like they're super packed now, especially in the evening where they let their dog run in the yard. And so it's like 35 Dachshunds now they have.
See, this could be a work trip for you. You might have to go investigate.
One of my favorite Dachshund owners, besides Randy, of course, is Gary Steingart, the novelist. And I'm going to put up a photo here that Gary Steingart posted on his Instagram of his dog, Bernie, upon adoption of the dog. And he wrote on his Substack, Gary Steingart, one of my favorite authors, Dachshunds have appeared in almost all of my novels. In my new one, Vera or Fait, the titular heroine gets compared to a Dachshund several times by her dad. Let's just say, Gary Steingart writes, it is the ultimate compliment as far as I am concerned. He talks about how he's longingly looking at Gary Steingart's martini. Randy, what is it about the Dachshund? So obviously you were entranced by the beauty of this small dog. As you talk to other owners, what is it that draws them to the Dachshund? Yes, there are the economic considerations we talked about at the top, but what is it about this dog?
There's other small yappy dogs. I have one. It's not a Dachshund. So,
yes.
Yeah. Why did you want one?
Yeah, so I've heard it described several times with different owners. They say that they're big dogs in small body, right? So, I mean, as you know, we're living in a small living situation. Like, a lot of people don't have space for big dogs, but they still want that big dog personality. And so, Dachshund is perfect. They're like big dog packed in little tiny bodies, so they would bark at things, but they're also very loving as well. They would just want to be close to you. So I have two dogs. Like my first one is a Pomsky, and he want to be near me, but doesn't want to get too close. Yeah, but with Woodford, you know, he just want to climb into my lap, or at least some part of his body needs to be touching me when I'm watching TV, or when I'm, you know, in bed, or when I'm going to the bathroom. He just want to be there and touching me all the time. And Sinclair, on the other hand, just, you know, he just want to be near me, but don't want to touch me. So it's different. And I've several owners have described the same thing to me, that they are the most loving breed that they've experienced. And for a lot of Dachshund owners, they say that once you got one, you would just want to keep getting another one. Oh, and one other thing is that Dachshund owners tend to have this sort of like form a tight-knit community. I've seen several events now in Bangkok of Dachshund walks or Dachshund meetup. And there's a global event called World Dachshund Day as well in June. And I went to that one as well.
I mean, who doesn't love a sausage dog? Quickly before you go, I do have to ask you, they do have some health concerns. A lot of these breeds do. I know that people who have these dogs have to have these little staircases everywhere because their long spines tend to, like, you know, lead to slip discs. Is that a concern? Is that something people should worry about, or is it an issue that you can address? We've only got about 30 seconds.
Oh, yes. I mean, that's a concern because 1 in 4 Dachshund may experience that, but we can help avoid that by providing ramp. Don't let them jump up and down tall pieces of furniture. And when we need to just take care of them, you know, extra care of their backs, and, you know, you have to hold them and support their entire back, and don't roughhouse them.
Don't roughhouse them.
I feel like, you know, I could use some hold and support me and don't roughhouse. I think that's good advice for everybody.
Randy, thank you very much. Randy Thongnak joining us from Bangkok. Great piece, commended to you on the terminal at Bloomberg.com. What breed is Brutus?
He's allegedly a Yorkie.
Allegedly.
But, you know.
Handsome in his own way.
He's very sad not to be here this morning. We are coming up on 9 a.m. in New York. The next hour of Bloomberg This Weekend starts right now.
Breaking news. President Trump's trade war escalates. Last-minute talks with Canada fall apart overnight, in spite of positive messaging just hours before.
We should be able to have a deal with Canada.
Now, fresh 50% tariffs are in effect on billions of dollars of Canadian goods.
Plus, the White House unveils plans to help lower beef prices. But some American cattlemen and Republican lawmakers have beef with the proposal.
And the president weighs in on the Treasury Department's bond buybacks and the potential for more intervention.
We have many types of intervention. That's one. The ultimate intervention is our military.
ultimate intervention is our military.
They can do a little exegesis of that over the course of the hour.
We're going to talk about that in just a sec. Welcome to Bloomberg This Weekend. We're coming to you live from our world headquarters here in New York. I'm Christina Ruffini.
I'm David Gura, alongside Alexis Christoforous and for Lisa Mateo on this Saturday, August the 22nd. A lot of news. Obviously, what's been happening in the roiling bond market, front of mind for all of us here on this Saturday morning. But of course, the news that we've been talking about over the course of the last couple of hours, somewhat surprising decision of the U.S. and Canada to walk away from trade talks, and the very real situation now in Canada, 50% tariffs on many, many goods.
That's right. We're going to get to all that in just a second. But first, let's go to Alexis for the headlines.
Thanks, guys. And that tops our news this morning. The U.S. slapping 50% tariffs on $20 billion worth of Canadian products after talks between the two longtime allies broke down late last night. The tariffs take effect immediately on hundreds of items, including plywood, liquor, electrical equipment, even hockey gear. Prime Minister Carney promises retaliation, saying, quote, Canada will match those tariffs dollar for dollar to protect our workers and businesses. The two sides blame each other for the collapse in talks. The U.S. says Canada made 11th-hour demands that upended a draft deal worked out earlier in the week. President Trump was in South Carolina yesterday making a last-minute appeal for Senator Darlene Graham, his pick to replace her brother, the late Senator Lindsey Graham.
With your help this November, we're going to stop the radical left Democrat communists here in South Carolina and all across the nation. And we're going to elect Senator Darlene Graham to fight for South Carolina and to always put America first.
Voters will decide Tuesday whether Graham or Congressman Ralph Norman will be the Republican nominee on the November ballot. Supreme Court Justice Chief John Roberts is allowing the White House to continue construction on President Trump's $400 million ballroom project, at least for now. Roberts signed a temporary order yesterday allowing work to continue while the court considers an emergency appeal from the Trump administration. Lower courts had ordered a halt to the project, finding that it must have congressional approval. U.S. cattle ranchers and the Republicans who represent them are pushing back on President Trump's plan to allow more beef to be temporarily imported into the U.S. tariff-free and sold at 25% below current market prices. Beef prices have climbed to record highs amid a cattle shortage, strong demand, and limits on cattle coming from Mexico. Ranchers warn that increasing imports could hurt American ranchers who are seeing rare profits these days. And authorities say at least 2 people were killed overnight in Ukraine by Russian drone and missile strikes. It comes a day after an attack on a Ukraine shopping center killed 16 people. Russia has been ratcheting up its ballistic missile attacks on Kyiv at a time when Ukraine is short on U.S.-made Patriot weapons meant to shoot down those missiles. Ukraine's foreign minister is calling for faster peace talks now that Europe is finally at the negotiating table. Christina and David.
Appreciate that. Thanks, Alexis. Again, that major story this morning having to do with those talks dissolving between the U.S. and Canada.
Canadian Prime Minister Mark Carney vowed to match the U.S. tariffs dollar for dollar. We're going to go now to Bloomberg White House correspondent Jeff Mason and our senior editor Chris Anstey. They have the latest. Jeff, I want to start with you. What have we heard from the White House about whether or not they're going to go back to the table? I know it's early, we may not have heard yet, but what is the appetite for going back to the table, or does the president kind of want to see what he can get after levying these tariffs?
Well, it's hard to say. It's only been a few hours now since these new tariffs have set in. But the president made clear last week that he was ready and did give an extension to the two sides because he thought that there was progress. I also though to the broader point of your question, Christine, I think it's important to note he's the one who put these tariffs on in the first place in a relationship that, as we were discussing a couple hours ago, had been one of the strongest allies that the United States can have in its northern neighbor. And that tension that has come in since the president started at the beginning of his second term, referring to Canada as a potential 51st state, has only increased now with these with this latest set of tariffs. Whether or not there is appetite to go back and talk, probably. I mean, it seems clear that it's in neither side's interest for this tit for tat to go on and on and on. But the tension is high, and that's going to impact whether or not they get back to the negotiating table quickly or not.
Chris Anstey, the author of the Economics Daily newsletter. Sign up for it, Bloomberg.com/newsletters. Want to put that plug in. I read it daily. Chris, when you sit down to write it on Sunday night, how are you going to think about what's happened here over the course of the last 24 hours? In other words, what are the economic effects largely of these tariffs likely to be?
Well, David, as you know, the other big story over the past several days with regard to Washington economic policy making has been Treasury Secretary Scott Bessent's intervention in the bond market. So when I see this Canada news, the first thing I think about is 50% tariff rate on a swath of Canadian imports sounds inflationary to me. And as we know, inflation is not good if you're a bond investor. So the first thing I think about is what's going to happen to the 10-year Treasury yield when it starts trading in Asia as they start absorbing this new inflationary impulse that, I mean, maybe for only a few days, but for some time anyway, is going to be affecting the U.S. economy.
Jeff, we heard that sound earlier, the president saying, well, do you have options? We always have options. We have the military option. What did that mean?
I don't have a good answer for you on that.
Right,
That's why I'm stumbling. Like, it does not make sense. It does not make sense at all, that answer. And I want to give a shout out to my colleague, Adriana Loenkron, who was asking those questions yesterday about the bond market. Those were spot on. And his first answer made a little bit of sense. He said that he was not the one who directed Secretary Bessent to do the intervention in the bond market. But when she followed up by asking him if they were considering more, then he gave that answer about the military, which maybe his head had gone to Iran. It's unclear, but there's obviously no military option for the bond market. I will step back again, though, however, and say it's interesting to me that both on the bond market, on Iran, on multiple things that the president and his administration are facing challenges with ahead of the midterm elections, that none of them have easy, quick solutions, and that all of them are potential things that voters will punish Republicans for, because this is the president's economy. This is the president's bond market, you could argue, and it's the president's war. Those create political challenges for him, whether he's giving answers that make sense on the bond market or not.
Chris Yancey, it's a big week here. We're looking ahead to the Jackson Hole Economic Symposium convened by the Kansas City Fed. Kevin Warsh is going to go there and give a speech that I think is going to be heavily scrutinized. Often the case when a Fed chairman speaks at this conference, but this year I think so, especially given what happened after the last Fed meeting. I want you to dovetail that with what we saw last week. You mentioned just a moment ago the intervention that we saw from the Treasury Department into the bond market. And what we saw the Treasury Secretary doing effectively was yield management, which customarily or historically has been the purview of the Federal Reserve Chair. Talk, if you would, about how these countervailing approaches stand to complicate things for the Fed in particular, and for Kevin Warsh, given his take on how he thinks monetary policy should be executed.
Yeah, it would be really fascinating to be a fly on the wall of the weekly breakfast between Treasury Secretary Bessent and Federal Reserve Chair Kevin Warsh the past month or so, because they've been each taking actions that have affected the other in kind of unhelpful ways. So remember that one of the reasons why bond yields have been rising over the past several months several weeks has been the reaction to Kevin Warsh's press conference at the end of the last Fed meeting, where he failed to explain really why they kept interest rates unchanged, failed to indicate specifically that they were prepared to raise interest rates in order to take inflation in. And there was a lack of clarity about his whole so-called reaction function about how he reads the economy. He even suggested that they may switch the inflation gauge that they look at for their target early next year. So the bond market took that and thought, oh my gosh, we're not really unsure about where this Warsh Fed is heading, takes yields higher. And then the Treasury Secretary comes in and intervenes and indicates that he thought that bond yields were out of whack. Well, remember in that press conference that the president said, the Fed chair said, that the bond market was accurately reading the economy, and he applauded the fact that they were playing the ball and not the referee of policymakers in Washington. So they really do see him at cross purposes, and it will be fascinating to see what the Fed chair has to say about the outlook on Friday.
Jeff, listening to Chris there, I'm wondering what you make of all this, because it seems to me like one of the places President Trump does listen to pushback is on the markets. And we saw that with him getting involved in the Fed. People reacted very strongly. He did eventually mostly back off from that. Is the lesson he's learned from that? We heard him tell our colleague he's not the one who instructed Bessent to the bond buyback. But is he kind of trying to go at this a different way now? And what will the reaction be if the Fed does have to raise interest rates? This is his guy. His whole thing is he doesn't want him to raise interest rates. He's making that harder now.
Indeed. I mean, if we look back on history, I don't think President Trump is going to react well to a rate increase, even if it's his guy. He has been pretty supportive of war since he came in. Obviously, this was his handpicked leader of the Fed. To your point that he backed off a little bit of his threats with regard to the Fed, it's true. He never actually fired Jay Powell, but he dialed up rhetoric pretty highly against Jay Powell when he was still in charge. And remember, Jay Powell was also his pick. So in the same way that the members of President Trump's cabinet or inner circle can never really be safe from a potential turnaround in President Trump's affections, I think that applies to the head of the Fed as well.
Chris, let's talk a bit about the Treasury Secretary's toolkit, as he put it. You and I spoke last after the yen intervention, and we talked a bit about why that didn't result in kind of a long-term change to the value of that currency. Here we have the Treasury Secretary intervening once again, now in the U.S. Treasury market, and lo, it didn't make a huge impact, at least a lasting impact. What tools does he have at his disposal as he teases announcing more of them? Is it simply more interventions of this size? Do they have to be bigger? Do they have to be more frequent? Sort of, what options does he have left?
Yeah, there are a few things. I mean, as you say, he can buy back more of the longer dated securities that have those higher yields. It's not free. He's got to pay for that somehow, and so they're going to be selling more T-bills, at the short end, and money market funds have a big appetite for T-bills. And so there's probably some runway there to expand that without sending T-bill rates up. And they can also give some indication about issuance of longer dated debt over the long term. Actually, just a couple of weeks ago, the Treasury released its quarterly debt issuance policy statement in which it opened the door to that possibility, saying that going forward they would look at changing potential changes in issuance across the curve. So that's another thing. They could just sell fewer of these 10s, 20s, and 30-year treasuries. They could potentially, work down their cash pile a little bit. They maintain, in excess of $900 billion of cash that's just sitting there, parked at the Federal Reserve. So they could work that down a little bit, cut back on issuance a little bit. But there's a potential cost here, David. The Treasury for decades has had this basic principle of being regular and predictable about its debt issuance. And the conclusion of U.S. Treasury officials and market participants over a long period of time has been that it doesn't make sense for the Treasury to try to time the market, to try to manipulate things on a week by week basis, but to be regular and predictable. Everybody knows over the next quarter, the next several quarters, here's where we're going. And so if you start, kind of mixing things up a lot, you may start leaving investors with doubts about, how,
Right.
if I want to sell my 10-year in 6 months, what's the market going to look like at that time? I don't know. Maybe I need to demand a higher premium to buy that thing now.
Jeff, speaking of mixing it up a little bit, I want to talk to you about beef imports. We've got some sound from the president, and then I'll ask you a question.
President, the move on beef imports is upsetting some ranchers, as well as some Republicans are asking you to delay that move on imports.
Well, we want to get the beef prices down, so we'll get them down a little bit. And that's what people want, that's what the voters want, and that's what I want. The ranchers are great. They're my people. I love the ranchers. They've done a fantastic job, but they admit that we need a little help and in order to get the prices down. So that's what we're doing.
Jeff, you wrote about this. What is going on with this change in policy, and why is it causing beef with some ranchers and even some Republicans? I know David hates that pun,
but
but
allow the pun.
I'm going with it anyway.
Beef with ranchers, yes. I mean, the broad answer is the president is trying to bring prices down again ahead of the midterms, and he and his administration are very sensitive to the fact that affordability has become such an effective argument for Democrats, when that in fact was the argument that he ran on when he ran for president successfully in 2024. So beef is one example. They're trying to bring this down by allowing some imports in without having to pay tariffs, and he said that he'd secured a deal that would result in that beef being sold for 25% less. And the reason that's creating issues with ranchers is it's undermining the U.S. domestic market. And so he received criticism from the senator from Montana, from Nebraska, I believe, and because ranchers are upset about this at a time when they're struggling with their business because of drought and other issues to make money. And so this undermines them, and that's a political problem as well as an economic problem for them.
Jeff Mason, latest piece, Trump tariff relief on ground beef sparks backlash from ranchers. He wrote it with Elena Penn. You can find it at Bloomberg.com and on the Bloomberg terminal. Thanks to you and to Chris Yancey as well for joining us on this Saturday.
Thank you both so much. All right, coming up, President Trump promised an economic D-Day for Iran. What does that mean? That's straight ahead on Bloomberg This Weekend.
Joining us live on Bloomberg This Weekend, I'm Alexis Christoforous. Let's update you now on some of today's top stories. President Trump is promising an economic D-Day against Iran as the war drags into its 6th month and as the U.S. faces dwindling stockpiles of key weapons. Former U.S. National Secretary Security Advisor John Bolton tells Bloomberg's Balance of Power the president has lost his way with the war.
The problem we're in now is the president didn't think through what his objectives were, didn't take adequate steps. He's been on again, off again for months now. And I think the Iranians see weakness. They see his concern for the upcoming November elections, and they're trying to play off that.
Bolton says the U.S. should use military force to open the Strait of Hormuz. Meantime, Iran's president is calling for an end to the war, saying Tehran holds a position of strength as diplomatic talks remain stalled. California Governor Gavin Newsom says he prefers a settlement of the state attorney general's lawsuit opposing Paramount Skydance's acquisition of Warner Brothers Discovery, quote, if it's a good deal. Newsom weighed in ahead of planned talks Monday between Paramount and the states challenging the $110 billion merger. Paramount CEO David Ellison is threatening to move the company out of California. A board vote could come as early as October. And the Trump administration is authorizing an early shift to the sale of wintertime gasoline blends. It's an effort to boost domestic gas supply and give Americans some much-needed relief at the pump. According to AAA, the national average for a gallon of regular is now $4.10. A year ago, it was $3.14 a gallon. Officials say the impact on fuel prices will depend on how quickly states respond to the change in federal policy. Christina and David.
Alexis, thank you very much. Appreciate
Thanks, Alexis. Okay, you're either with us or against us. That's Treasury Secretary Scott Bessent's message to U.S. allies ahead of a press conference on Monday, at which the Treasury Secretary has teased he will announce details of the new economic operation, to use the president's words, against Iran.
But as Bloomberg Economics has pointed out, if 47 years of sanctions have not broken Tehran's will, more of the same is unlikely to produce any changes. Kim Ghattas is a contributing editor for the Financial Times and the author of the forthcoming book, The Best Kind of American, a true story of murder, war, and America's undoing in the Middle East. Kim, I'm pleased to say, joins us now. Kim, great to have you with us. And I want to just ask you about how you think about the potential efficacy of heightened sanctions, different kinds of sanctions, tightening of the screws in the way it seems the Treasury Secretary has teased here. The war has begun. There's been a campaign of bombing. I think customarily, historically, a country would start with severe economic sanctions, ratchet them up as much as they can, and then go to the military alternative. Not the case here, and I wonder sort of what difference you think this could make, if any.
Great to be with both of you. Great to be on Bloomberg. Thanks for having me. I would just remind you that there was an effort to put pressure on Iran, economic pressure on Iran last year and at the beginning of this year, which crashed the Iranian currency and pushed people into the streets of Tehran and the rest of the country. I'm not saying it was part of a plan. I'm not saying that it was the correct sequencing, that they had thought this through within the Trump administration. After all, I wrote a piece in the Financial Times saying there is no grand plan on Iran, but it's important to remember that the Trump administration has been trying different things, and this kind of pressure on Tehran has been there for a while. Yes, then they went to war. They expected a quick collapse of the regime, people flooding into the streets to topple the Islamic Republic. That didn't happen. Now they're back to economic pressure, but also trying to neutralize Iran's leverage by bypassing the Strait of Hormuz. We're seeing all these different players in the region also working to bypass the Strait of Hormuz. And I want to say one thing, because I've thought a lot about Iran and the US and the relationship between them over the last 47 years. It's true that if something hasn't worked for 47 years, why would it work now? But the circumstances are slightly different. And that's why it's possible that it could lead to a different result. I'm not predicting the collapse of the Islamic Republic or perhaps an implosion, but it could lead to something different than we've seen over the last 47 years, because there are different elements to the equation, namely the severe weakening of Hezbollah in Lebanon and the weakening of Iran's regional architecture that it has built over the last 47 years, including, most importantly, with the collapse of the Assad regime in Damascus at the end of 2024 or 5. I'm sorry, my timelines are all over the place.
Okay, we all understand that.
Yours and mine, yes.
Yeah, but it's important to keep in mind that Iran today is operating and trying to survive in a very different environment than it had enjoyed over the last 47 years.
With all that in mind, when you look at the landscape of what could possibly be sanctioned, if you are trying to impact those proxies, the regional network, if that's where you think they could potentially be effective, can you walk us through kind of some specifics of what they might target and what the result might be? And in the short run, does this mean life gets worse for the average person in Tehran?
Life always gets worse first for the people, right? In Iran, in Syria, in Lebanon, we've seen it again and again. Sanctions are a blunt tool, not as blunt as missile strikes, but very blunt. They cannot be applied in a very targeted way. They affect people generally. The 66% inflation in Iran at the moment, the currency has collapsed. There's millions more people unemployed since the beginning of the year. And we've seen these repeated protests in Iran, whether it's about freedoms, as we saw in 2022 with the Mahsa Amini protests, or whether it was about economic conditions at the beginning of this year. If there is a well thought through plan, we'll find out on Monday from the Treasury Secretary. I suspect it would be further tightening economic ties between Iran and the region. We've already seen the UAE announcing that it's cutting all trade and ties with Iran. That, I think, will have a big impact. We're looking at the sanctioning of, or the denomination of Hezbollah in Lebanon as an affiliate of the IRGC, the Islamic Revolutionary Guard Corps in Iran. There's a tightening of the noose around Hezbollah in Lebanon, both financially and militarily, and we can talk about that as well. And crucially, trying to find ways to cut off the unofficial ways that Iran still is able to finance its proxies in the region. I'm thinking about the central bank in Iraq, the militias, the Shia militias in Iraq, trying to find all those, different routes that Iran still uses to feed its proxies and allies in the region. But the impact on the Iranian people is great, not only economically, but of course they've been through months of war this year and years of oppression by this Islamic Republic.
Well, let's pivot to Lebanon, as you suggest. I think we're a week out from the latest attack that we saw in southern Lebanon, 11 people killed in 2 Israeli strikes last Saturday. And you mentioned the noose getting tighter around Hezbollah. How do you see all of this playing out? There was a lot of, it was a much ballyhooed talks that took place between Israel and Lebanon. I'm curious sort of where you see all of this headed as you, somebody who's paid such close attention to this country in particular.
Several points to make here. I'll try to be quick. First of all, Israel is not going to make any concessions. Specifically, I should say the Israeli Prime Minister, Benjamin Netanyahu, is not going to make any concessions, any tangible, real concessions before the Israeli elections on October 27th. So whatever happens, Benjamin Netanyahu is not going to give gifts to anyone, including the Lebanese government, which is a real problem for the Trump administration, which is really trying to have a success in the Middle East, and they kind of are focused on Lebanon now. Marco Rubio in particular is hoping that Lebanon can be a success of negotiation, of countering Iran's influence, of neutralizing Iran's ability to support groups like Hezbollah in Lebanon. We're seeing Israel turn southern Lebanon, 6% of the territory, 67 villages, 270,000 people made homeless in Lebanon. That 6% of the territory along the border between Lebanon and Israel is now uninhabitable, and I believe will remain so for the foreseeable future, even if those negotiations between Israel and Lebanon come to a positive, outcome like a security agreement or a peace agreement even, but I think we're very far from that. Israel is very clearly creating a depopulated buffer zone along its borders in Gaza, in Lebanon, and outside of the territory it already occupies in the Golan Heights in Syria. I want to make a point, David, which I think gets lost sometimes in the discussions about how to handle a group like Hezbollah in Lebanon. I don't know what people imagine about what this group is like, how they operate, but sometimes I wonder whether people think they're like guerrilla fighters in the jungle, like the FARC in Colombia. We have to remember that Hezbollah is part of the Shia community. It doesn't represent all of it. I think it represents, it is supported by perhaps half or maybe even less, a quarter. But its members are not all living in the tunnels in southern Lebanon. They are the air conditioning guy who installed my air conditioning. I didn't know he was Hezbollah. I called a guy and he showed up, that he was recommended by friends, and he installed my air conditioning, and then he died fighting for Hezbollah. So they are part of society. They're part of Lebanon. You have people in the same family who one is a secular leftist Marxist and one is a Hezbollah fighter. And so we need to understand what it would mean to forcibly disarm and go into people's homes and villages and send the Lebanese army into that fight. So what the Lebanese government is trying to do right now is to corner Hezbollah as much as possible financially, assert Lebanese sovereignty, and see how things unfold in southern Lebanon with Israel's continued attacks against, civilian infrastructure, but also tightening the noose around Hezbollah positions.
Kim, great to speak with you. Thank you very much. That's Kim Ghattas. She's a contributing columnist for the Financial Times and the author of the book Black Wave, which I commend to everybody. Great to speak with you on this Saturday. And Christina, again, picking up, she mentioned the piece that she wrote in the Financial Times, I think it was a month ago now, suggesting that we were kind of ready for a long, hot summer of calibrated escalation, slippery slope to conflagration until these Israeli elections in October. And I think that's very much front of mind for folks in Lebanon, but across the region. We've talked about Prime Minister Benjamin Netanyahu's prospects in those elections, but really going to be a kind of signal moment, I think, in this story of this war that's now 6 months long.
Absolutely. And it's also really important when she was talking about how when you think of Hezbollah in Lebanon, it is exactly what she's talking about. It's not all these militias. It's people who are so interwoven into the material. I remember when I was there, it's been quite a while since I was there, but we visited an old Roman ruin site, and as you pull up in the car, a guy gets out and was selling Hezbollah T-shirts, wow. Just like you would see at Disney World. Hezbollah T-shirt, Hezbollah T-shirt. It's just a vendor. It's a name. It's something everybody knows somebody who's in it. It's not going to be as easy as just taking out Al Qaeda in Iraq or something like that. But all right. Now for something completely different yet again.
Coming up here, college students heading back to campus. We're going to break down who's enrolled and who is staying at home. Some new data here from the Common Application released this week about international students in particular. Going to dig into all of that next year on Bloomberg This Week and on Bloomberg Television Radio, Bloomberg.com, and the Bloomberg Business app.
We'll be right back.
Thanks for joining us live on Bloomberg This Weekend. I'm Alexis Christoforous. Let's update you now on today's top stories. President Donald Trump's 50% tariffs on some Canadian goods are now in effect after the U.S. and Canada failed to reach a last-ditch trade deal. The new tariffs target $20 billion worth of products, from hockey sticks to wine. Canada promises to match the tariffs dollar for dollar. Both U.S. and Canadian officials blame the other side for the trade talks falling through. Residents on Hawaii's Big Island are bracing for another powerful storm just days after Hurricane Lala caused massive flooding and knocked out power for millions. Hurricane Moke is expected to be weaker than Lala, but the National Weather Service says it may still dump up to 15 inches of rain and life-threatening flooding and mudslides when it slams into the Big Island Sunday into Monday. Here in New York City, meantime, the U.S. Open kicks off this weekend, but this year's tournament will be missing the world's top-ranked tennis player, Italy's Jannik Sinner. Pulled out of the tournament yesterday because of a right knee injury that sidelined him since winning Wimbledon. But Sinner's rival Carlos Alcaraz announced he will be playing following a 4-month absence with a wrist injury. The winners of this year's Grand Slam tournament will get a piece of the record $108 million compensation prize. And start your engines. The Freedom 250 Grand Prix takes place this weekend in Washington, D.C. It marks the first IndyCar race ever held on the National Mall. It's part of the celebration of America's 250th birthday. The free 2-day event features a 1.7-mile racetrack zipping through the nation's capital with landmarks including the Washington Monument and the U.S. Capitol as the backdrop. So you know what that means. Leave your car at home.
Don't parallel park it.
Somebody,
Don't leave it on the
one of our
one
of our journalism colleagues was tweeting that it took them 2 hours to get like half a mile the other day when they were setting all this up, because it's any route that would cross you near the Capitol.
And a number of these museums have done studies to make sure that artifacts don't fall or break.
Oh, I didn't even think of that. That's a good point.
Revving engines.
And the sound.
We'll see how it goes. Well, I think that President Trump is going to be waving the green flag to start
I'm
it.
sure. I think it's going to be really cool and a spectacle. It's just going to be hard to live through.
Yeah. Well,
yeah. Well, I'm here now.
You're here, yes.
This is a problem for my brother and all my friends.
Yes,
I'm sure they'll send me many messages. I'll update us all next
Thank you,
week.
Alexis.
Thank you. All right, American colleges and universities are facing some big changes in the years to come. This week, we learned the number of international students applying to attend U.S. colleges fell by about 10% for the next year. That's the biggest decline in at least a decade.
There's also another issue at play. As Bloomberg News has reported, the country's tumbling birth rate is pushing schools toward a demographic cliff where a steadily dropping population of people in their late teens and early 20s will leave desks and classrooms empty. Nathan Grawe is professor of economics at Carleton College and the author of the book, The Agile College, How Institutions Successfully Navigate Demographic Changes. And he joins us now from Minnesota. Professor Grawe, great to have you with us. And maybe we could just start by talking about this kind of broader demographic trend. When we talk about the cliff, how precipitous is it? What does it look like? And how are you seeing that manifest itself at Carleton Colleges and places like it?
Yeah, so a cliff might be overly abrupt. The reality is that what we're seeing is over the course of maybe 15 or 20 years, a decline in the number of babies being born, totaling about 15 or 16%. So it's 1% decline one year and another 0.7 decline the next year, but it adds up. And for institutions that don't have large endowments, which is most of them, that kind of contraction year after year after year can be really destabilizing.
And there's compounded issues here, right? Because you're seeing a decline in international students, partially due to visa complications. Keep in mind, those are students who mostly pay full tuition because they don't qualify for domestic aid. And there's other factors as well, including college is so expensive. A lot of people are looking at doing other things, trade school or skipping it altogether. What does the bigger picture look like? And how big are those factors in comparison to the demographic issue?
Yeah, it's pretty important. If we go back to the financial crisis just about a decade or so ago, 15 years ago, and we look since then, we've seen a pretty substantial decline in the number of people going to colleges. It's been focused in the two-year sector where enrollments fell by more than 1/3. A lot of that just reflects a strong economy. We've had very low unemployment with the exception of the pandemic blip, and we've had wage convergence. So wages at the bottom of the wage distribution have been rising faster than the middle and the top, and that draws some students out of higher ed altogether and into either the labor market, or they might choose the trades and get a certificate but not follow through to the associate's degree or a four-year degree. So we've got those factors that have led to a decline in the number of high school graduates who go on to college. We've seen a decline of about 10% over the last decade or so. And now we are on this precipice of this decline in the number of young people reaching college-going age. So it's a very challenging time with a lot of, as you point out, a lot of different forces converging all at once.
Nathan, what does this mean for the schools themselves? How are they, I don't want to say reacting to this, but kind of changing their business model and their approach with the understanding that this is coming? I think that our colleagues here at Bloomberg have reported on a number of these schools having to close their doors, yes, because of the demographics, but these compounding factors as well. How is it altering the terrain of higher education?
Yeah, we certainly have seen an unusual number of colleges that are closing, but even those that are staying open, we're seeing program closures with greater propensity. So we're looking for efficiencies in expenses, but we've also seen more competitiveness in the recruitment. So while the long-term trend has certainly been positive in the cost of higher ed, in the last decade, we've seen declines in adjusting for inflation, both in the sticker price and in the net price, that is after the institutional grants are accounted for. And they're meaningful declines. So if we look at tuitions and fees, just the sticker price adjusted for inflation, at public 4 years, that's down 7% in the last decade. And if you look after the grant aids are awarded by the institutions, we're looking for at much more substantial declines in the net fee income that the institutions are collecting.
So if these trends continue, how does this shake out? Do you see colleges needing to consolidate? Do you see more specializations in certain sectors so they can combine those students, less of a broad-based liberal education in a lot of these places because they just can't afford to keep that many different programs? What do you do, and how do you convince kids that this is worth their money, this is worth the debt they might have to incur?
Yeah, I think you're nailing it in that it's not going to be a silver bullet solution. We're looking at forces that are large enough that we're going to need a lot of different solutions altogether. But at the heart of all of those solutions, we have to think about meeting students more effectively where they're at. And so it does mean making the argument for the return on investment, because we know students, as they're considering going to college, care very much about this as an investment. So we have to speak their language and make clear the relevance of what this is to their life after college. But it also means we have to really promote student success so that we can increase retention rates. It's one thing to draw a new student to campus, but if they only stay for a year, we're really failing that student, but it's also not going to benefit the college's financial position much. If we focus on student success, then we get repeat customers, and that's better for our mission, and it's also better for the financial health of the institution.
Where is the pain likely to be the most acute? I'm going to go out on a limb here and say that at a place like Carleton, which when I was in high school, I had friends who went there. They told me that there were tunnels through the snow in the winter. It was that cold. Students still go there. You're still teaching there, a very popular and prestigious institution. Is it going to affect schools like you most, or are there going to be pain points at other kinds of schools, state schools, technical schools? Where is this likely to play out most?
Well, there certainly are some institutions, and Carleton is lucky to be among them, that are a bit more insulated. The institutions that are accepting just a minority of their applicants obviously can just go deeper into their pools, and that's quite fortunate. But the vast majority of institutions in the United States are these regional institutions. They might be regional publics, or they might be private institutions that recruit regionally, and they accept the vast majority of the applicants that come. They're open access institutions, and the private institutions among that group typically don't have large endowments. And so when we see a decline in the number of young people and a decline in the number of students coming to campus, those institutions tend to feel the pinch most. The public institutions, the public regionals, will also likely experience some real pressure, but of course they have the taxpayer as the backstop. And so legislatures will have to make some tough decisions about, do we continue funding even if the number of students is declining? But there's at least another lever that those institutions can pull.
Nathan Grawe, was I misled? Was I misled about these tunnels? Is the snow that high that there actually has to be tunnels between the buildings?
It depends on the year, but I would encourage all of your listeners to come and do a college tour in January. We've got our bald spot, the center of campus is covered with an ice sheet, and you can play broom ball and hockey and ice skate. There are lots of great things to do here in the winter.
To a T, everyone that I know who went there loved the school. So I will say, Nathan Grawe, thank you very much. Appreciate that. It's Nathan Grawe there of Carleton College. He's the author of the book, The Agile College, How Institutions Successfully Navigate Demographic Changes. And it sounds like many are on the horizon.
Would you go back to college?
I had a great time in college. I would not go back to college at this point in time. I grew up in a college town, though, so I got the benefits of all of that.
I would go back, but I'd spend more time focused on studies and all the other things.
Fair enough. You know what I'm eager to go back to? The Pointed News Quiz, which is coming up here. Lisa Mateo.
I had a really strong lead at some point.
Yes.
I think you're winning. I think you've won more of these than me at this point.
I'm not sure that your powers of persuasion are as effective with Alexis as they are with Lisa, so we'll see if I have a better shot here.
You two are the ones who collude. Let's see. Maybe she'll play fair for once. All right, we'll be back. We'll see how we do. Get ready.
Time now for this weekend's Pointed News Quiz. I've been waiting all week for this.
You know, this used to be your weekly dose of humiliation, and it has turned into my weekly dose of humiliation.
See if that changes today. So, Alexis Christoforous here, filling in for Lisa Mateo.
Alexis, if you let me win.
She's bribing me.
No.
I like it.
I don't, look.
Well, look, it's my first time doing Pointed with you guys.
Right?
Maybe I'll be a lucky charm.
All right.
So listen, if you're also watching this for the first time, just a quick primer. So there are 3 categories. Everybody gets 30 chips, which frankly, I really think the purple chips should have gone to Christina today because of what she's wearing, but that's just what
David insisted on having the purple.
I always demand the purple,
And depending on these categories, you could bet the house and put all 30 chips, or you can only bet in increments of 10, okay? So like you can't put like eight chips on something.
Christina always does that. She never bets the house.
Yeah, that's true. I do try to spread it out.
I like it. It's sort of like her portfolio.
Nope.
I'm only kidding.
We don't need to get
all right,
into that.
here are the categories. Here are the categories. Are you ready for them?
Yes, I'm ready.
Streaming, transportation, appliances.
Okay. I confess I wasn't in the office several days this week. I was out of office, and I feel like I'm can be equally bad at all of these.
I might know the first one. I have no idea what the second 2 are. I'm going to do the usual. I'm going to just put 10, 10, 10.
Are you as well?
I'm going to do as well.
Okay, I
feel sad doing that. I like to usually roll the dice, as it were, but no. All right.
Okay, I like your approach. All right, first one, streaming.
Streaming.
YouTube is offering exclusive deals worth millions to prevent creators from posting content on which streaming platform?
All right.
All right. Feeling pretty good about this, I think, you guys.
Good,
yeah, I did read this one.
Quite quick. You read this one.
Yeah. Oh, you read it.
With my gut.
Okay, then go, Christina.
Netflix.
Yay!
Oh, I wrote TikTok.
You were out this week. You were out.
I was out, but don't fear not.
Oh, so Alexis, here's a really fun part. You get to take his chips away from him.
Oh, do I get to take them?
Yes.
You know, you play the role of the dealer.
Do I get to cash them in later if I keep
Unclear.
I wonder what I get.
All the great
Unclear. They're kind of just
worth
little fractions of our egos, but you know, you can hoard them over us.
Okay, should we move on to transportation?
We should, with some
sadness. So Fiat Topolino
Okay.
is coming to the U.S. with a maximum speed of, hold on to your hats, 25 miles per hour.
Yeah.
What kind of a vehicle is it?
Okay. Topolino.
Topolino.
Really cute pictures of this on the internet, by the way.
Topolino. What is Lino?
Which means little mouse
Little
in Italian.
mouse.
Topolino.
Oh, I love that. I love that fact.
Not that that gives you any clue as to what kind of car this is.
Yeah.
Oh, okay.
Okay. She's erasing. We're not. Are you confident about this, David?
No, but confident in my lack of confidence.
Okay, ready? Good.
I wrote scooter.
I just
nice
erased
try.
that. You said car.
Yeah.
So I said golf cart.
Yes.
Oh,
maybe I did give her an edge.
Maybe.
Oh boy, there it is too. Isn't it cute?
Quite cute, yeah.
I like it. People are actually using it now in communities,
adorable.
like gated communities. They're using it to sort of bop around, not
Who
even
is
on
this
the
young woman
golf
in this
cart.
golf
Well, she shouldn't
cart?
be in the
What's
golf
she
cart.
doing?
Come
Where is
on.
she?
It looks very much
She
like
must
the
have a large
Fiat
property.
500 for our radio listeners.
Yeah.
It's like a little.
And how about that color?
mean, I would drive
It's
that.
mint.
Can I drive that around? Is
mint.
it street legal? Can I drive that around New York?
It looks street legal.
It doesn't have
doesn't
any
it?
doors.
No doors. There's a rope.
I would say no, not in New York City. All right, let's move on to
I'm sorry.
appliances.
Here's more chips.
I keep forgetting to collect his chips.
Alexis, you're welcome back anytime.
Christina,
All
I
right,
think
here
I'm
we
your
are.
lucky charm.
Okay.
Appliances. It has been a hot
Appliances.
summer in Europe, and that's
So
no
hot.
joke. Chinese exports to the European Union of which product made Hisense, made by Hisense, are up 43% from a year ago. So let me repeat. Chinese exports to the EU of which product made by Hisense are up 43% from a year ago. All right, I think you guys got it.
I wrote air conditioners.
I wrote fan.
You know what? Close but no cigar,
No
Christina.
cigar.
I'm sorry. I'm so sorry. So I get 10 of her chips,
Yeah,
please. I'm
I'll
sorry.
take
I'm sorry. I'm
those.
sorry.
I'll take those, please.
There's control room laughing in my
There
ear.
is, yeah.
I didn't
You know.
realize this till I read it on the terminal. Chinese companies control 2/3 of the global market for air conditioning.
I did know that, and I'm surprised it's not fans because I was just in London. It was ridiculously hot, and
Yeah.
no one would allow themselves to have an air conditioner. The guy at the corner shop, I was talking to him about it. He said every time he installed one, because he was in a historic district, the council would come and tell him to remove it. So
They
I
need to
assumed it
rethink
was.
those.
2/3, you said?
2/3.
Maybe I should run on a platform of air conditioner sovereignty.
I like that. I think you may gain traction.
You know who I'm not a fan of?
What?
You.
Me.
Okay.
Okay,
You gotta
bonus
get,
question.
I'm going to say
There
one
is
word.
a bonus question.
Mini split. Look
Minnie's
into mini
gotta get a
splits. They got to get a mini
They're
split.
great.
All right, I have a bonus. Are you
Okay,
ready?
yep.
This is exciting.
This could be-
Okay.
Japanese
this could be big.
food.
Yeah.
Okay, the bonus. The restaurant chain Marugame,
Okay.
Marugame
I see it there on the screen.
is expanding in the U.S. Which noodle, thicker and chewier than ramen, does the chain specialize in?
Okay.
We're looking for a noodle here. And,
you a noodle eater, Christina?
I do like noodles.
Oh.
You know, I made ramen the other night.
Did you?
I'm really enjoying it. I
You
have
do
a
the
lovely
broth
recipe.
and
I do the broth
the
and I do the
egg?
egg. Oh, I do the egg. Yeah, you got to be
Yeah,
careful.
the egg is key.
Yeah, it was
Soft-boiled.
wonderful. I took a picture of it actually because it was so good. All right, let's see. What did you put
Sorry.
down?
Soba.
Udon.
Udon is right. Oh man, you are.
I did almost write soba, to be fair.
chipless.
All right. Well,
All right, David. Well, I've got them all.
I'm
I've
clawing
got
my way
you.
back. I'm clawing my way back.
I'll read the news. next
Am I
time.
allowed to come back?
You, of course, are allowed to come back.
Absolutely.
And I
Lisa's
should
got
say-
some competition since
Yeah.
that
Okay.
I seem to have better luck this time.
I will note, you can test your knowledge on all 10 questions. We did 3. There were 7 more. Take the Pointed News quiz at Bloomberg.com/pointed. You can also find it on the much ballyhooed Bloomberg
But
Business app.
the
Yes?
main difference
Yes.
is if you take it at home, you get choices.
Multiple
Here, you guys
choice.
don't get any
I
multiple
know.
choice.
I've been
That's tough.
advocating for this for
I
many,
don't know how you
For the
do
multiple
it.
choice.
many days now.
Oh, we just got a no from our
Yeah,
executive producer,
well,
so I think that's not happening for us.
I guess it's more entertaining or more work. I don't. Maybe
It's more
both.
entertaining when
Maybe
you're
it's both.
embarrassed and we get to watch
It's a
it.
little,
Yes.
it's a little. We did have one of our bosses do it once, and he said that was like the most stressful 5 minutes of his
I can
entire
imagine.
career.
Yeah.
So
I'll stay on this side of the desk. Thank you very
You're the
much.
dealer. You're
All
the
right.
questioner. All right. Thank you for joining us on Bloomberg this weekend. Tomorrow, we hope you'll join us starting at 7 o'clock Wall Street time. I'm David Gura.
I'm Christina Ruffini. Thanks again to Alexis Christoforous, who will also be here tomorrow
Yes.
with us. For our listeners on Bloomberg Radio, Masters of Business is up next. And for our TV audience, Wall Street Week with David Weston starts right now. We'll see you tomorrow.